seats. For those who are outside the hall, may I request everyone, please settle down. It's 10, so respecting time, we'll start
Recording
on
in
time.
progress.
And let's promise ourselves we'll conclude the day on time. We did that yesterday. And day one was an action-packed day. Welcome once again to day two of the Conference on Valuation, organized by ICI RVO, jointly with ICI and IBBI. Please come, take your seats. हॉल के बाहर भी जो लोग हैं, सभी डेलीगेट से हमारी प्रार्थना अंदर आ जाएं, स्थान ग्रहण करें. So good morning everyone. It's the 15th of May 2023. What is special about today? That's right, today is the foundation day of ICI RVO. A huge round of applause and let's wish happy birthday to ICI RVO. It was on 15th of May 2018 that ICI RVO was established. What a wonderful, interesting journey this has been for 5 years. And as we celebrate the 5th anniversary, here is the two-day conference. Today it's the day two. And before we begin the action on day two, let me quickly recap what happened on day one for the benefit of everyone. So day one, we started sharp at 11. We had the inaugural session where the chief guest was Honorable Justice Arjun Kumar Sikri and the guest of honor was Jayanti Prasad ji. And they talked about the theme, sustaining public interest through valuation ecosystem. Through the day, we had interesting technical sessions and panel discussions. And we came to know about the valuation ecosystem that contains the two-tier regulator, IBBI, what's their role? What's the role of the RVO? 15 of them. The frontline regulators, judiciary, NCLT, NCLAT, Supreme Court, the RVs, the RVEs, the industry, academia, and we were very happy that amongst the audience we had cross-sector of people who are related to valuation. So we talked about them, we talked about the government sector, the private sector, the valuation ecosystem. And the speakers also mentioned that valuation is nothing new. It has been existing since time immemorial. But ever since the valuation rules 2017 came, there was a change of landscape in the valuation ecosystem and they helped us understand that. The second aspect of the theme was also touched upon, sustaining public interest. Very essential that the public for which the valuation report is being submitted understands the importance of the valuation report, valuation, and the valuers. So that is what we talked about, and it was a very interesting day of deliberations. Here we are on day two. Today we'll have 5 technical sessions and 2 very interesting panel discussions. So are you all ready for enriching, knowledgeable sessions? Yes. Thank you very much. Welcome once again. Let's begin with the first technical session of day 2, which is on the topic risk assessment and mitigation, role of valuation professionals. And may I invite on stage the moderator of this session, CA Anuj Goel, Central Council member with the Institute of Chartered Accountants of India, to please join us on the stage. And please also welcome the very distinguished speakers, Shri Atul Sopti, Director General SCOPE, that's the Standing Conference of Public Enterprises, and Shri Sumant Batra, President, Insolvency Law Academy. Can we have a huge round of applause for all 3 of them? I request CA Anuj Goel sir first to welcome Shri Atul Sopti ji with flowers and a memento. Atul ji, the memento that will be gifted to you as a token of gratitude is a very invaluable artwork that represents incredible India. This is made of hand by craftsmen from Bastar, Chhattisgarh. And this is our way of expressing gratitude for your gracious presence today. Thank you very much, sir. I request Anuj sir to now welcome our other distinguished guest, Shri Sumant Batra, with flower bud and memento. Live in your dream is what Mr. Sumant always advocates, and he's living his dream of being an insolvency expert. I now request CA Anuj Goyal ji to start the session. Over to you, sir.
Thank you very much, CA Amit Arora ji, our Master of Ceremony. Very good morning, friends. I am really very happy that we are having this very, very important summit, I will say, on completion of this very, very important 5 years of the formation of ICI RVO. And it is my distinct privilege to serve as the moderator for this session, forming part of this two-day conference, jointly organized by Institute of Chartered Accountants of India and ICI RVO, where we have the honor of taking care of each and everything which is happening in this particular sector, and the pivotal role topic of risk assessment and mitigation, and the vital role played by the valuation professionals. We are fortunate that we are having two esteemed speakers gracing us with their presence, who bring with them a wealth of expertise and insights. With great pleasure, I extend a warm welcome to Sri Atul Sopti sir, the Director General of the Standing Conference of Public Enterprises, SCOPE. A very, very big round of applause, friends, once again. Friends, Mr. Sopti's illustrious career spans over 4 decades, during which he served as the Chairman and Managing Director of Bharat Heavy Electricals Limited, BHEL, a Maharatna public sector enterprise. His visionary leadership and unwavering commitment have set new benchmarks in the industry, making him an exceptional authority on the subject. We are honored to have Mr. Sopti share his profound insights on risk assessment and mitigation from the perspective of public sector enterprises. It is also my privilege to extend a heartfelt welcome to Mr. Sumant Batra, a globally acclaimed insolvency and policy lawyer. Mr. Batra's illustrious career includes serving as a senior international consultant to esteemed organizations such as the International Monetary Fund, IMF, World Bank Group, and OECD. His contributions to shaping insolvency frameworks worldwide, coupled with his expertise in policy matters, have earned him well-deserved recognition. Mr. Batra's insights on the role of the valuation profession in risk assessment and mitigation are invaluable. We are truly privileged to have him enlighten us with his vast knowledge and perspective. So a very, very big round of applause for Mr. Batra. Friends, these distinguished speakers bring a wealth of experience and profound insights to our discussions today. Their contribution to their respective fields are truly commendable. It is with great anticipation and eagerness that I invite them to address this esteemed gathering and share their profound thoughts on the future of the valuation profession and its indispensable role in the risk assessment and mitigation. Atul Sopti ji, Director General of SCOPE, I think he is going to take the first session. So may I request Mr. Sopti, our Honorable Director General of SCOPE, to address this very, very eminent gathering, I will say. Very, very prominent professionals are here with us. It is really our fortunate that we are having all of you to this very, very important summit. We are having our past secretary of the Institute of Chartered Accountants of India also, and he is taking care of this very, very important ICI RVO, and I think the galaxy of other officials who are supporting him. So with this, I will request Atul Sopti sir to address all of us. So very, very big round of applause, friends.
Thank you, Dr. Anuj. Dear Shri Sumant Batraji, who is the president of Insolvency Law Academy, sharing the dais with me and the other speaker, and CA Anuj Goyalji, who is the Central Council member ICAI, CA Sarika Singhal, who is the CEO of ICAI RVO, senior officials of ICAI RVO, and the eminent and esteemed participants who are present here. I had the opportunity of meeting some of them in the beginning who have joined this particular program. It's really a privilege for me to be the part of this Foundation Day conference of ICAI RVO, where I've been given to the opportunity to share my views also. At the outset, I would like to congratulate ICAI RVO for the 5th Foundation Day, which happens to be today, that is on 15th of May. Congratulations to all of you. Let's give them a big round of applause on that. While it's an important day for the whole organization, that RVO, but it's equally important for all the participants or the stakeholders which are connected with it, whether they are chartered accountants, whether they are lawyers, whether they are policy makers, whether they are industry experts. It's very, very important for this Foundation Day to be connected with ICAI RVO, which in fact a body to regulate the profession of the registered valuers, basically so that utmost dignity of the profession and the individual is manifested. Very important organization, I feel this RVO is. I would also like to compliment the Institute of Chartered Accountants of India for recognizing the valuation as one of the most critical tasks in the financial profession and creating a dedicated arm for the purpose. It's indeed my pleasure to be amongst the galaxy of valued resources of the country today. Thanks, Sarika ji, for persuading and motivating me to be part of it. In fact, at the outset, let me confess that I am not the expert of the subject. So many experts are sitting here among them. I am not the expert. But having served the Indian industry in various capacities for over 4 decades, including heading various public sector organizations in various capacities, I certainly understand the importance of the correct evaluation and correct valuation. In fact, I remember sometimes in 1985-86, at that time, valuation was okay. Everybody used to talk about the valuation, but that kind of importance was not there as a profession or as a standardization or the various practices which were to be adopted. In fact, that time I got some flavor of this valuation from a well-known author, teacher, and I think he was the past president of ICAI also, Mr. T.S. Grewal. In fact, he was the one who was my finance guru during the MBA course. And he, in fact, at that point of time, when we used to talk about the DCF and other methodology, we touched upon and had the flavor of this particular valuation. But afterwards, a lot of water has flown in Ganges, and the total changes and the perspective has taken place for this valuation. In fact, if we go back to the history of the valuation, in fact, as initially the young man was mentioning, it's not new. But after this new valuation rules which have come, it has become more professionalized, more standardized, and definitely it's being viewed as a very, very important task for the country, for the economy, for the individuals. In fact, this thing is going on from the Vedic ages itself. At that point of time also, land was considered to be one of the most important aspects for giving the value to that. And it was valued based on their fertility, water resources, etc. when it was sold. Then came the Mughal era, and if we talk of the Mughal era, at that point of time, some better professionalization took place, and the value was assessed by the Land Revenue Administration, primarily for the taxation purpose. And that time, in fact, you can say institutionalization of this profession, valuation profession started. Then, in fact, during the British period also, there was a, what you call, if you see, the first time Valuation Act was passed sometime in 1850, and at that point of time, this record keeping was introduced. So, over the years, it was developed. But during the 20th century, lot of things have come into being for this particular aspect, and he initially shared the kind of developments which have taken place in the country, where I think yesterday all these points were covered extensively. So things have totally changed over the years. Now we are not talking about the land alone, we are talking about the investments through the informed decisions. We are talking of the various organization for the successful merger and acquisition. We are talking about the valuation of the intangible assets. We are talking about the assets and liabilities for financial reporting. Whole gamut of things have taken place now. And it is becoming one of the most important aspects, because it's very important that laid down mandate and legislations are followed to arrive at the correct valuation. And we also apply the professional judgment to that, and especially being the people, you know that we have to be sensitive to the time also, timeline. You cannot take months together to arrive at that particular valuation. And it has been observed, in fact, I'll not go to the specifics here, because these become very sensitive things. There is one of the top reason of cancellation or unsuccessful mergers is the wrong valuation. Wrong valuation could be perception of that valuation, and which is either overpayment or the wrong expectations. And I'll talk about I was told to touch upon by CA Anuj Goyal ji about the public sector perspective, because I come from Standing Conference of Public Enterprises. Many of you may not be aware what is this scope, what is the Standing Conference of Public Enterprises. Standing Conference of Public Enterprises is an apex body of all the public sector enterprises of the country. And we are into the field of the policy advocacy, we are into the field of the capacity building, we are into the field of research and development, we are into the field of representing employers to various national and international forums, including EPFO, ESI, Ministry of Labour and Employment, Worker Education Board, International Labour Organization, United Nations, and OECD, etc. So that's our task. And public sector enterprise I'll touch upon, just to give you some flavor of the public sector enterprise performance also in this regard. Lot of things are happening in this area. If we talk about the public, government has taken a decision that in the non-strategic area, there will be some sort of dilution of the ownership, or totally what you call disinvestment in the non-strategic area. I mean that many of you may be aware. And now there is a National Land Monetization Corporation which has been formed under DPE, basically for monetization of unused or underused non-core assets of the public sector. Then the next point is, there is a lot of merger and acquisitions which are taking place in public sectors also. One public sector, another public sector are buying outside also. There is a merger outside country also. Merger acquisitions are taking place because of the aggressive strategic approach which is being adopted by many of the public sector enterprises. And one other point is that sometimes there is a requirement of acquiring used assets and machineries, and at that point of time also this valuation it becomes very critical. And in fact these in all these areas in the past there have been many issues also. When evaluation is perception is not proper. You know, even after the things have been sold, it gets opened up. After many years, the valuation was not proper. There are cases, you know, in the recent past also, maybe the last year, etc., certain for the certain organization which were identified for the disinvestment. In fact, later on, because of the correct valuation could not be established, so whole deal was to be cancelled for certain organization. In fact, definitely that was a loss to the exchequer. Coming to the what do you call, I was talking about the import of or purchase of second-hand equipment or the maybe sometime unused equipment. I know the case, it was early 90s in one of the organization, one machine was acquired, imported, which was at that time costing around 9 to 10 crores of rupees, and that machine gave the payback period very fast. Still, after it was acquired, and there were various cases which continued for more than 25 to 30 years because of the issue of the correct valuation or the perception of the correct valuation, because it has to be transparent, it has to be accurate, that kind of transparency had to be proved. And you can imagine those people who took that decision, they took the decision in favor of the organization, but later on it went against them. How important, I'm just trying to touch upon the point, how important valuation is today for the managers, for the industry, and as well as for all the professionals. Let me give you some what you call flavor of the public sector enterprise. This is a very important thing. Many of you may not be aware. Look, there are today 248 public sector operating PSCs in the country. They were set up in the country. Basically, today we are talking of Atmanirbhar Bharat. At that point of time, these organizations were set up for the socio-economic development of the country, primarily with the objective of import substitution, primarily with the objective of making country self-reliable, primarily with the objective of basically price stabilization also, and development of the different geography of the country. And they have served that purpose very well. There is an investment of close to 23 lakh crores, and there is a turnover, financial revenue, I am talking of 22, 23 figures are still not consolidated, 21, 22 figures I am telling you. There is a financial revenue of 32 lakh crores, and they are contributing close to 13.5% of the Indian GDP. Just imagine, 32 lakh crores, which translates to close to 390 billion US dollars. You see, yourself can see the IMF data. There is normally they report, last time they had reported almost 216 countries GDP. I was going through the data a few days back. This GDP, this contribution revenue which are talking of this 390 billion, only 40 countries have more than this. It means 176 countries have the GDP less than the contribution which is being made by the Indian PSCs. Just see the importance, the kind of mammoth of the activities, the mammoth of the contribution which is being made by these public sector enterprises. Another point, 390 billion. We consider that Hong Kong is a very big, developed area, of course now part of the China. But the Hong Kong GDP itself is 382. I'm talking about 21, 22, which is lower than the revenue of these. South Africa GDP is 399, approximately of that size. Pakistan GDP is 376 billion US dollar. So I'm just trying to compare this to give you an idea the kind of financial revenue or the contribution which is being made by these organizations. Another important point I like to mention about this organization, 5 lakh 13.5% of the GDP is being contributed by the public sector enterprises. 5 lakh crores every year they are contributing to the government exchequer by way of duties, taxes, dividends, etc. Gross block cost is 27 lakh crores, and this is not the historic cost. Just imagine if one has to set up a new BHEL unit or a new sale unit, how much investment would have to be made? That's the reason people go for the revaluation, which all of you are fully aware of. Another important aspect, you please take back this particular thing in your minds and share with your what you call colleagues also. The total profit, overall net profit is 5 lakh crores. And out of 248, this is a very important and very strong statement which I am going to make it. Out of 248 public sector enterprises, 188, that is 75%, are profit making. Against the popular public perception that many PSCs are loss making. I mean, yeah, please. Absolutely. I mean, that point discussed can be discussed, whether ROI is there or not, whether if this could have been, just imagine, you are saying of ROI. I'll give you one, what you call, comparison. Depends where it was set up. I'll take example of BHEL plant. BHEL plant was set up in the, I'm not at the moment discussing public versus private sector. I'm just going to suggest you something. BHEL was set up at Hardwar. When BHEL was set up at Hardwar, today there is a what you call 800 megawatt generator that weighs close to 300 metric ton, and then when 300 ton what you call generator is being carried from Hardwar to say South India, we have to construct 40-50 bridges across the country. Everything has to be, relayed. Why this was set up there? This was set up at Hardwar, this was set up at Hyderabad, this was set up at Tiruchirappalli for that economic development of that area. State away ROE calculation is very easy today as a finance man. But the point is the kind of economic development which has taken place. But if you talk of ROE also, 5 lakh crore on 32 is also not bad. The performance, what you call profitability aspect, I am talking about it. Anyway, this is the point which can be discussed separately. When the new, what you call, private sector manufacture case came, nobody set up what you call manufacturing plants at these places for the economic development of the area. Those were set up close to the places where it can be transported immediately. The actual cost became very low for them. So anyway, this is a point which needs to be seen. The point I was making, anytime you can, this point can be discussed separately, offline also can be discussed. 75% of the, I told you, the public sectors are profit making. If you see through the, go through the net and you will find in USA, out of the listed organizations, only 50% are the profit making. You people are experts, you can give me the figures in India, out of the listed companies, how many are profit making. I told one of our what you call colleague from the industry to give me the data. He got me the data yesterday that out of 4775 listed companies from which he could get the data, 3000 only were the profit making, that is 63%. You can share some better data, that will be nice for me. The point is, this is just I wanted to give you some flavor of the public sector enterprises. Another point I like to share with you, where you have to take pride in the country's development over the last 75 years. As an Indian, we are proud of it. Let me start with the coal sector. When वो टाइम कुछ और था, देखिए मैंने बताया है, आज की डेट में मैंडेट हैज़ बीन कम्प्लीटली चेंज. Our memorandum of understanding, which we enter into the government of India, it is not only the social benefits for which we are evaluated. We are evaluated for the returns on the, like my friend was mentioning about the capital investment also, return on net worth also, as well as the revenues also. Initially, of course, they were primarily for that. But the advantage of these companies have been, they have been not only able to be successful commercially also, but for the social development also. I'll just tell you about the India. India, in fact, coal industry, when India became independent and the first 5-year plan was made, at that point of time, our production was hardly 33 million ton. today we have already crossed 900 million ton, and 982 was the figure which is being projected for the 22-23. This is a great achievement. We are the second largest producer in the world of the coal after China, and out of that 90% is being contributed by the public sectors. And if you're talking about the what you call if you're talking about the profitability, just see the Coal India Limited profitability among the top companies in the world. If you talk of the return on investment, or you talk of the return on the what you call revenue also. Coming to the what you call steel you mentioned. This is another. I am talking of the India perspective. India in 1947 was only 1 million ton, and today it's close to 125. You're asking about steel, and a lot of contribution is coming from the public sector in this particular area. Electricity, that's the very, very important point. When India became independent, at that point of time, 1362 megawatt was the only installed capacity. And in fact, Delhi itself today is needing more than 3000 megawatt. 1362 was the installed capacity. Today it is 4 lakh megawatt. I mean, as an Indian, we need to be proud of it, the kind of achievement which has taken place in the country. And more than 50% is contributed by the public sector, which was close to 60 to 70% before this, what you call solar power, we started coming. And India, when became independent, we were not electrified, even a single village was properly electrified. Today, all villages are electrified, primarily by this public sector enterprise alone. डॉलर का प्राइस नहीं, ये तो देखिए डॉलर का प्राइस, एक्सपर्ट्स आर हियर, दे लेट देम रिस्पॉन्ड. डॉलर के प्राइस का इससे कोई लेना देना नहीं है. प्राइस ऑफ ए फॉरेन करेंसी is dependent on many areas, including the inflation rate of the country, including the foreign policies of the country, including the what you call trade, including the macroeconomic development and the what you call international development. It has nothing to do with this. There is no correlation for the dollar rate with this rate. Of course, if what you call a lot of the kind of import substitution which has taken place because of these industries, otherwise we would have imported all those things. Coming to your point, I was mentioning, India is one of the 5 to 6 countries in the world as a manufacturer of power plant equipment, high technology power plant equipment. Others are Japan, USA, Germany, China, and those few. And these are being, and I must salute those forefathers of ours who had the vision that India should be manufacturing this power plant equipment. And we have been manufacturing this high class, high technology power plant equipment. 15 lakh, close to 15 lakh are the direct employment, and indirect employment is many. And another point I like to mention, that when petroleum refining, when India became independent at that time, it was 0.5 MMTPA, and today it is 250. 0.5 to 250, and 76% is coming from the public sector enterprises. In the gas sector, it was nil in 1947. Today, 26,000. I mean, take pride in the development which has taken place in the country. And out of that, close to 69% comes from the natural gas. I mean, I can keep on giving you the figures. That's a because we need to take the pride of what India has done during these 75 years. That's a great thing which has been achieved by the country, and the contribution which has made by the public sector enterprise. Coming to the valuation now, of course, giving you the flavor of it. Just imagine if something goes wrong during the valuation of this 248 operating public sector enterprises for the many areas. Even a small wrong can create hell of a problem, and that can be very damaging to the economy. That can be very damaging to the even reputation of the valuation profession itself. Hence, when this era of dynamism, when a lot of things are taking place, we need to have in this valuation transparency, accountability, standardization, and the stakeholder engagement of regulatory oversight, which has been now introduced in a big way in the country. And So there is, these are the some of the notable aspects which for which regulatory framework is now in place, professional organization is in place, independent valuation agencies are there. I like to add few points to this because I was told to share my views that what is expected from this profession. Yeah. क्वेश्चन आंसर शुरू है इसलिए खत्म हो रहा है ना. These are those public sector enterprises which are directly in the industry area. Banks नहीं है. Basically the question I had planned for 15 minutes only, but questions started coming. Okay, I'll add to my perspective that what is expected from this profession. First is develop the in-depth knowledge about the organization with which you are dealing. That's one of the most important thing which I have seen. You should have, because valuation is not a science alone or the art alone. It is the inexact science requiring both objectivity and subjectivity. So need to have the complete what you call knowledge about the organization. In fact, if required, you can engage the experts in that particular field. And second point is you should maintain. There is a need for maintaining independence of opinion and judgment, because this is a very important statement which I am going to make, because objectivity has to be ensured and it should not be lost in pressure of time or undue influence. Please note down my words. This is very, very important thing, because valuer is appointed for an objective and fair valuation, not for coming under pressure or undue influence. This is a point which I am making. Third point is due diligence of information, and of course there is you get, because you work based on the information which is provided there, and lot of what you call disclaimers and caveats are put just so that we are not responsible for it, but that should be loss resolution. First do your best so that it is not required basically the caveat or the disclaimer to be put. Go into the complete detail. Fourth point, which is very close to my heart, time is short so I will not touch upon much on that. One is technological innovation. It's very important to make use of the artificial intelligence and the blockchain for this valuation thing also. This will definitely help the valuation profession, I mean to have leaps and bounds in the complete work. Another important point is that continuous education and research, because skilling is a very important aspect. I'm seeing many young people there. India is a young country. More than 2/3 of the population is below 40 years. So, but the people, there are a lot of changes, practices which are taking place over the years. They are changing. So we need to have the regular education, and programs like this definitely will help, as well as the research works also. And main challenge for the valuation professional is to develop a deeper understanding of the market globalization and what is happening in other countries, how they are doing it. And we as a what you call body of the public sectors is very closely working with the stakeholders, including the government, policy makers, public sectors. And in fact, we had entered in an MOU with the Institute of Chartered Accountants of India for the capacity building, and had organized the programs also, 2-3 programs. They were part of us in the budget discussions also, and we'll be happy to further this MOU for the ICAI RV also, so that both the valuers and public sector, they draw benefit. Why RVO if any other organization is also keen? So that kind of association can be there. And now I like to say that ICAI RVO, they need to step up and become one of the most, they already become the most preferred RVO in the organization, and they have developed the valuation standards also. But the kind of best practices we are having here in India and discussing and deliberating here, I feel that they should become the best practices in the world, and not only in India. Thank you, and I wish all of you the very best, and thank you very much for giving me this opportunity to share my views. Jai Hind.
Thank you very much, Mr. Sopti, for sharing your profound insights on risk assessment and mitigation. from the perspective of public sector enterprises. We are having Sumant Batra ji, a globally acclaimed insolvency and policy lawyer. A very, very big round of applause for Mr. Batra. Over to you, sir.
Going by the schedule, I have just about 5 minutes, so I'll try to be. Okay, thank you so much. Very well, thank you so much. See, no profession. I'm sorry, I'm skipping some of the formalities because I would like to make the most of my 10 minutes. I'd like to believe that no profession is built in a day. It takes decades, sometimes many, many decades for any profession to reach where it sort of earns the respect of the community, the society, the country, and then, of course, internationally. Look at the profession of lawyers, doctors, and some of the other professions, teachers, who are considered to be an integral part of the social fabric of any country. They are considered to be those who contribute to nation building. They are not professions that are seen to be inward looking. They are professions that are seen to be those that are something which are part of the thought process of any nation, any society. It was almost 20 years ago when we, in our minds, conceived the insolvency profession. It was after the Asian financial crisis when, for the first time, we were alerted to the fact that there could be factors taking place anywhere in the world could impact India as a ripple effect or tremors, or where there is an earthquake where taking place in any part of the world, but you see the tectonic plates underneath shifting, which has implications running to thousands of miles away from the epicenter of that earthquake. That is what a financial crisis always is, and nobody would understand that better than you. And when that took place in Indonesia in 1998, with the failure of Asia pulp and paper industry, which had global investment, Malaysia, Thailand, Singapore, Indonesia, all of them suffered, and of course global enterprises, global institutions, countries that had investment in this also suffered. And India at that point in time, just coming out of the shadows of a closed economy, stepping into the sunrise of a market economy, a free market economy, had not really experienced these kind of impacts of global events. But what happened in Indonesia in 1998, which translated into an Asian financial crisis, alerted us. And that was the time when we started looking at the insolvency, financial stability, and a lot of other areas much more closely than we had done in the past. We never really felt the need of that because we were a protected economy where state-owned enterprises were driving the development, were driving the vision of the country, were creating wealth, were creating jobs, and there were very little dependence on the private sector, on private individuals to be able to contribute to wealth creation, job creation. That opportunity was never given because the state felt that they owe the larger responsibility to that, not trusting as much the individual dreams, the innovation, the ability to create wealth. But having said that, as the market economy opened up, for whatever reasons, be it compelled by our own individual crisis or the fact that there was an undercurrent of demand for that from a young, aspiring middle class in that sense. But it was that exposure around that time when we started experiencing some of the most dynamic laws that we did not have in the country, including the insolvency law, that we realized how specialized that subject is, and that for that law to be adopted in India and implemented in any form or shape, you would need very specialized profession. You would need new disciplines of in various sectors which run the entire spectrum of insolvency. We had not even thought of valuation at that point in time because you had to take the first step first, and insolvency profession was what was conceived. And when Justice Irani Committee was constituted in the late 90s, and later on Justice Irani Committee, Dr. J.J. Irani Committee was constituted, both of them recommended that there should be an insolvency law. and there should be also an insolvency profession, which should be at the core of this insolvency law. It took 20 years, nearly 20 years of persuasion at the policy level with the government. And I feel very proud that I was a part of the whole process over the last 20 years. And eventually in 2016, when the Insolvency and Bankruptcy Code was passed, this profession was conceived. And it has grown very rapidly, much more rapidly than any other profession has grown. And that, of course, there are various factors responsible for that, and we could probably discuss it at some point in time later on, because we don't really have the luxury of time today. But the fact remains that in many other countries, it has taken 25, 30 years for the insolvency profession to reach where we are in India today. And not just because of the opportunities it offered, not because of the work that it has, but because of the importance that it has achieved, the attention that it has got from the policymakers, and the effort that is being made to make sure that this profession becomes a very niche profession, very sophisticated profession, and most importantly, that it earns the confidence of the market. It earns public confidence. There is a public trust that this profession must carry. Something very similar to what we see in insolvency profession, in medical profession, and in the profession of teaching. And some other professions also. I'm not really excluding it to that sense. That is what the essence of and the importance of that profession is. And that is why when you say the topic public interest, I read in it public confidence and also public trust. Because if you have confidence and you have public trust, public interest would be served. That would be a natural expectation. That would be an aspiration. That would be the outcome. That is how you would be measured in terms of how you deliver your services. And 6 years, 7 years perhaps, as IBC sort of strengthens and deepens its roots, new professions are beginning to get the sunrise, the importance, the attention, and valuation is one of them. I was reading the Indian Express today. That's the only newspaper that I subscribe. And if you see the business page on that today, it carries almost one quarter of a page news on how disappointing the IBC has been in the last 1 year in terms of the recovery that has been maybe able to make for the banks, less than 16%. Of course, it is disappointing, but there are various factors to that, but we are not discussing that. But one very strong, powerful message that comes out of it is that we have so far not been able to achieve the price discovery that is expected of an effective and efficient insolvency system. There are many reasons why we may have a gap between how the law sits on the statute, how it is implemented, and what it ultimately offers as outcomes which are measured in different ways. And one of the ways it will always be measured is what are the percentages of recovery that it makes for the stakeholders. That is the most significant scale at which any insolvency law is measured. And of course, there are a number of factors that go into eventually in how that percentage evolves. But valuation is the silver line that runs through it. Of course, you need to have a competitive market. You need to have more players. You need to have the committee of creditors that has that maturity to be able to take decisions. You need to have the freedom to be able to decide and take realistic decisions. What is the real value that you come? You need to have a very efficient process, a process that is transparent, efficient, gives fair and equitable opportunity to all players, and ultimately results into something which is best for all stakeholders. But valuation is something which sits at the heart of the process. The credibility and integrity of the valuation process. And that process is run by valuers as a professional. And I have a very strong reason to believe that in the next 7 to 8, 10 years, as the IBC matures, more and more focus would shift to valuers as a profession, as those who would play a very important, almost a pivotal role, if I may say, into the shaping of the insolvency law, into the shaping of how the market will continue to have confidence in it, and especially the banking industry. And I do believe that the start of that will happen perhaps in the later part of this year when we'll have the new set of amendments come in after the monsoon session, or probably during the monsoon session if those get passed by the parliament, otherwise by an ordinance certainly. And that is where I think the next level of, or if I may say, shifting of the gears will take place, where the attention will move more and more to the professionals. Only one last comment that I want to make. I remember almost about 6 years ago, there was a conference at FICCI where I had actually spoken to, addressed to about nearly 1,500 insolvency professionals who had just joined as this new discipline, very, very excited about the opportunities that lay ahead. And only one thing that I mentioned amongst many things to them at that point in time was, while of course this offers great opportunities, it's very rewarding, the profession, it is very, very accomplishing if you do it right, but it also carries a huge responsibility in terms of how you conduct yourself in the first few years of the profession. That responsibility is entirely on you. If you were to self-regulate yourself, if you were to set very high standards for yourself, a very high benchmark for yourself in terms of how you perform as a market, as with highest of standards, that is how and that is what will determine your future. Because the regulator is watching, the policymakers are watching, they're watching very closely. And if you perform well as per the expectation that they have from you, they will step back and not tighten their regulatory noose on you. But the moment they see that you are not self-behaving, they will come after you. And that is what we have seen in the insolvency profession the last 4 years, how the regulation over regulation has come in order to keep a deeper oversight, more regulations to ensure accountability. And I think that's almost like an alert kind of a sound for valuation profession, that please, these are early years, through these mediums, through conferences, through your best practices, raise the bar so high that nobody feels the need to regulate yourself beyond the point, and you set the standard, you set the example as to how a profession must conduct itself with the highest of standards. Thank you so much.
So thank you very much, Batraji, and thank you very much our very prominent resource person, Atul Swapti sir and Sumant Batraji, for I think for the second day you are the best opener for our this 2 days very, very important summit. And today is of course the birthday of ICI RVO. We are completing 5 years. This is the 6th birthday. So thank you very much. A very, very big round of applause for Atul Swapti sir and Batra sir. And we are of course having the architect and mentor of our ICI RVO, Rakesh Sehgal ji, our past secretary of ICI, and Sarika ji and her entire team. Thank you very much. Over to our star, Mr. Arora. Sir, we are running out of time. Can we discuss the things over a cup of tea? That would be better.
Thank you very much, Anuj sir. Thank you to both the panelists. And with that, we conclude this technical session 1 on day 1. Once again, a round of applause for all our panel members. Thank you very much. I'm sure you've got a lot of questions as you've heard the distinguished speakers. I'm sure that you will be able to interact with them off the desk and ask the questions. But respecting time, we will move on to the second technical session of day 2. So the technical session 2 is on the topic interplay between risk assessment and role of valuer, forensic audit perspective. May I invite on stage CA Soumit Nikhra, Head Compliance and Investigation Practice with the law firm AIZB and Partners. Please also welcome couple of panelists who are joining us virtually. Please welcome Shri P. Sharat Kumar, President with the Hyderabad chapter of Association of Certified Fraud Examiners. Mr. Sharat Kumar, can you hear my voice, sir?
Yes, sir, I can hear, but my video is not, permitted yet.
Mr. Sharat Kumar, can you hear me?
Yes, sir, yes, sir. I can hear you loud and clear.
Okay, thank you, sir. Good morning. Also joining us virtually is another panelist, Shri P. H. Ravi Kumar, Independent Director with Aditya Birla Capital Limited. Mr. Ravi Kumar, good morning. You can hear my voice? Mr. Ravi Kumar? Okay, we can
Good
see
morning.
Mr.
Good morning. Yes, I can hear you all clear.
Okay, thank you, sir. Thank you for joining us. I invite on stage the moderator of this session, CA Abhay Kumar Chajarji, respected Central Council member ICI. And may I request Mr. Soumit Nikra to also please join us on stage. Today is a special day because it is the birthday of ICI RVO. Another significance. Internationally, 15th of May every year is celebrated as Families Day. So families are very important, and the family of valuation is also very important. So congratulations for that as well. It's over to the moderator, CA Abhay Kumar Chajarji. First and foremost, may I request Abhay sir to please welcome our distinguished speaker here who's present in person with flowers and also a memento. Thank you very much. Thank you. It's over to the moderator, Abhay sir, with the request that between the four of you, we are able to respect time and conclude this second technical session by 11:35. Thank you.
Thank you. Thank you very much. Thank you very much, Amit. Morning to everyone. Truly an honor and privilege to moderate this very important session. Interplay between risk assessment and role of valuer. Forensic audit perspective. I think this would be more much awaited session. I would say the session 6, where we have an experts who would be actually talking about the assessment and role of valuer in line with the forensic audit. I think that's a good combination, I must say, for this session. And we have our experts who already joined us, of course, in person, physically joined. Shri Soumit Nikra, welcome for this session. And we have virtually present Shri P. Sharat Kumar. Thank you very much, sir. And Shri P. H. Ravi Kumar. So I'll just a brief about the distinguished speakers which we have today for this session. Shri Soumit Nikra, the practice head of compliance and investigation practice at AZB and Partners. With his impressive background in forensics and risk advisory, he has gathered 18 years of experience in advising organizations on complex internal corporate investigations and forensic audit. His exceptional credentials, including being ranked for white-collar crime and corporate investigations, is exemplary in his field. Thank you for being here. Welcome you. Shri P. Sharat Kumar, a chartered accountant, senior partner of Messrs. Sharat and Associates, with 40 years of professional experience. He specializes in financial strategy, restructuring, forensic investigations, and many more particularly the fraud risk management. Received a letter of appreciation from Secretary General of Interpol and his role in investigations related to Satyam scam. So these are his, I would say, work which he's done in the area of forensics. So welcome you, sir.
Thank you. Namaskar.
Shri P.H. Ravi Kumar, virtually again, is a commercial banker, accomplished, a remarkable experience of 51 years, career in financial service sectors. His extensive experience in retail, corporate, and treasury banking, coupled with his instrumental role in setting up the ICICI Bank Limited NCDEX, and ARC, Invent Assets Securitization and Reconstruction Corporate Limited, speaks volume about his vast knowledge and experience. So we have with us these three distinguished speakers, and I'm sure it would be, an interesting, I would say, with their inside knowledge, we would have an interesting session throughout this next 40 minutes, whatever the time which has been allotted by the MOC, and I'm sure the vast experience, knowledge they possess, participants would really, truly be enriched and would have great experience and will be benefited with all these experienced speakers. So thank you all of you for joining this important session, and I would now request Shri Soumit Nikra to address the members. Thank you very much.
Can I have the slide, sir? Sure. Thank you. I think really pressed by time, but I'll make it very, very efficient. And I have Mr. Sarat Kumar and Mr. Ravi Kumar also to speak about their part. What I will do is I'll just try to complete my part in next 15 minutes, and happy to take any questions. And Mr. Sarat Kumar and Ravi Kumar ji, if you feel at any point in time you want to chip in, we can make it very, very coordinated, because some people are virtual and some people are like I am physical. So I think this is very, very interesting topic, and particularly from the valuation perspective, I really feel that this is like one of the most important session. Particularly, you will appreciate the fact that there is a lot of valuations which are being done, but suddenly whenever things go south, and whenever there is a forensic audit which is called, the financial statements completely go upside down, right? And that is where the situation come where things go litigation, or even the banks who have done the valuation, who has given the basis the valuation, they have given a particular loans and mortgages. There is a question being raised on the entire valuation which is being done. So there are a lot of learnings which are there, and which considering this profession is very, very upcoming for all the valuers who are there in the room, or if people have joined virtually, it is important to understand that because of the forensic audit in itself give a lot of important aspect which needs to be considered while doing the valuation. I'll just cover these three elements which are very important. One is risk assessment, second is the forensic audit, and the third is valuation. Is there an interplay? Can the valuation be done in isolation? I will say the answer is no. While doing any kind of evaluation, it is important to understand that what kind of risk assessment which has been done. When we say risk assessment, it involves identification and analysis of various risks which are being faced by a particular company, particular industry for which the valuation has been done. So it is very important for any valuer to understand that what kind of a risk assessment has been done and what kind of a risk which are associated with that particular industry. There cannot be a one solution for all. It has to be a very, very industry specific, and that is where the risk assessment, which are very, very industry specific, needs to be considered while doing the valuation. Second, the forensic audit. Now, forensic audit, as we all know, it's something which has happened on the post facto basis, and it is something which is a complete application of accounting, auditing, and investigating skills to basically identify what is something which is behind the veil. What is there? What is the window dressing which is there? There is always something which is behind, which is not true, and that is where the forensic audit comes into picture to basically see that how the numbers have been window dressed. Lot of time what happens is, as a part of the valuation, yes sir. Exactly. बिल्कुल. But at the same time, that is what. So I'm right now just covering three concepts. There are a lot of slides. Okay, I'll try to cover your specific answer. That what kind of a skepticism which has to be there. Otherwise, the forensic auditors are not required. The audit would in itself would have kind of, in any statutory audit, okay, which is being done, are those always true? Are those always correct? No, right? There are, after the investigation, it is always found that the entire, the books of accounts which has been finalized and which has been audited, okay, there is a falsification which has happened, which as a part of a normal statutory audit, it will not be identified. I completely agree with you. But at the same time, with evolving this particular situation of frauds which is happening on the financial statement, there is a level of skepticism which has to be ensured. And that is why if you see from the Companies Act 2013 perspective, there are a lot of new specific responsibilities which has been placed even on the statutory auditor, that while doing the financial statements audit, you need to keep all this skepticism into the mind. Similar thing applies to the valuers also. And that is where I am coming. If you take everything at the face value, it will not work. Thank you, sir. Forensic audit and then the particularly valuation. This is where now there is an interplay between the forensic audit and valuation. Specifically, if you see any kind of a financial reportings which are there, which are being done, there are a lot of frauds which are getting unearthed. Whether it is in terms of revenue, in terms of expenses, in terms of assets, or in terms of any kind of other items which are there in the financial statement. So the question is, at the time of doing any kind of a valuation, doing any kind of a specific methodology, whether it is income, asset, or any, I think the most applicable here is the income methodology which is being used. Are those considering the specific forensic aspects, whether any kind of skepticism which is being applied at the time of doing valuation? That is a very big question. I'll give you some of the examples. I'm a little pressed by the time. Take an example, valuation process. Nowadays, current industry, the business scenarios have changed. There's a need of high level of skepticism which needs to be applied while performing any kind of a valuation. It cannot be a simple statement which has been provided by the company for the purpose of valuation. It has been taken into at the face value. There has to be multiple normalization which is required to be made. If there are any apparent questions which have been raised by the auditors, or any kind of a qualification which has been given, are those being considered as a part of the valuation? And these I am telling you about the specific. If you analyze in last 5 years, what kind of a questions which has been raised on the valuation in itself, and that is very important learning. You may always say that these are maybe 5% of the cases, but those 5% of the cases are very, very important to be considered to ensure that the overall trust which is there on the profession of valuation is increasing. As in, if you would have kind of heard in the previous session, Mr. Sobdi has clearly mentioned that how we can bring a confidence in the front of regulator that the valuations are being done properly, or are those being done just based on whatever kind of specific financial statements which have been provided. So there is a skepticism. That's you must have kind of heard at least 10 times I have mentioned the word skepticism. It is something which is beyond obvious, which has to be considered. So valuations are not just simply taking things at the face value. That's the first point I would like to highlight here. Second, ensured sufficient backings are there. Because nowadays, in lot of litigation, being a part of the law firm, I have seen in the litigation cases, particularly from the bank perspective, where the loans have gone NPA, the first thing which is questioned is what is the valuation which has been done? What kind of assumptions which has been taken into consideration at the time of doing valuation? what kind of underlying documents and the workings which are there, and those are actually being dragged to the court. Those specific underlying documents which are forming part of the report, the underlying documents and other papers or other assumptions are being now challenged, that there was a simple missing of logic at the time of doing valuation. And it's an important learning. It may be just 5% of the cases, sir. The question is right. You cannot be a forensic auditor at the time of doing a valuation. But at the same time, can we be more careful? Is the message which is something which is coming out. And these are all post facto basis. There was a valuation done, there was a particular, loan may have been given, or any kind of a particular asset sale or merger acquisition which has been done. Okay, that's the first starting point. But subsequently, when things have gone south, when the forensic audit has been done, it was found that the basis, the underlying documents on which the the valuation was done itself was not sufficient. The valuers have now been, if you see into the public domain, there are a lot of cases. There are a lot of cases where the valuation have been completely, if I can use the word, and my apologies, the entire valuation report has been thrown into the dustbin. It has been questioned, the people have been penalized. So the objective of this particular session is to basically just highlight that there is a lot of sensitivity, there is a lot of, rather than just taking things at the face value what company is providing. And companies, see, if you see, the person who is trying to get the valuation done itself is a conflicted party.
Yes.
They want best of the best valuation to be done.
Precisely.
Right? They are conflicted and they want the best of the best valuation to be done. Right? They will provide you the figures, they will provide you the underlying document, but as an independent, because it is your letterhead, your signature, your name which is getting attached to that particular report. But so it is all about the kind of questions which have been asked, how the things have been challenged at the time of when the valuation is being done. ऑडिटर को कौन अपॉइंट करता सर? बट हकीकत ये भी है सर that the kind of information which has been supplied to the valuers are not always true. We have to accept the fact. Yes. Exactly. Live example, sir. Live example now. I have thousands of examples. Unfortunately, very less of time and other renowned speakers are there. But at the same time, I would like to highlight that as all the valuers who are there in the room, please go through all the results of forensic audits which have been done, and at the same time, what kind of questions which have been raised on the valuation. Sir have mentioned there was a 700 crores and it has gone to 10 crores. This is one example. I can show you 10 examples. And being from a law firm, we ourselves is actually helping the litigation team internally to basically prepare a case not only against the company but also against the valuer.
Yes,
we have made
yes.
them as a party.
Precisely. Ms. Nikra is right.
100%. So the question, the only objective here is, I may have multiple slides, the only simple message which I would like to pass to all the valuers, that this is an upcoming profession. There's a lot of trust which has to be gained with all the regulators, and hence we need to ensure that how we can bring that particular kind of a confidence. I think the same message which was given in the previous topic and the same message which is coming from this topic, and I'm sure the same message will my other co-panelist will also give, that there is a high level of skepticism which has to be involved. It is not just a arithmetical Excel sheet work which has to be done as a part of a valuation, but at the same time it has to be done objectively and independence has to be ensured. Your client may be the same person who may be giving you the fees, but at the same time your independence cannot be compromised. Simple. बहुत अच्छी बात है, but at the same time this is the reality. And majority of the disputes, if you see, sir, between the multiple parties which are coming, it's on account of simple valuation, whether it is a merger acquisition which has been done on a particular valuation, or if a particular collateral which has been given as a valuation for the bank, or there are multiple scenarios basis which this entire valuation report, it becomes a very important basis. So, and at the same time, I will just cover the last point because I have to give a mic to my other co-panelists also. The valuation experts are facing a high risk. That is a
Yes.
fact of the life. You can please go through multiple cases which are right now there as a part of either Supreme Court, High Court, District Level Court, any court, and lot of forensic audit outcomes which are coming out. I myself have been involved in multiple things, okay, and I have seen what kind of a things which goes, how the valuation reports are just being issued without too much of senses. So I don't want to be very critical, but at the same time somebody has to speak a truth, and that is where I would like to just highlight, being my experience, personal experience from the forensic audit perspective, that there is a lot of skepticism which has to be ensured, and ultimately if these things are not being done, things will go into the litigations. The people individually as a firm will become a party to the legal case, a long drawn legal cases. With that, I would like to just hand over to Mr. Sarath Kumar sir and Ravi Kumar sir for their comments. Thank you.
Thank you. Shall I go ahead, sir?
Yes sir, please.
Sarath Kumar here.
You're audible.
Yeah. Shri Abhay Kumar Sejjarji, my co-panelist Shri Soumit Nikra and Shri Ravi Kumar, and very august audience here. I have 41 years experience as a CA, and I am a former officer, having working with CBI, ED, SFIO, NIA, NCB, whatnot. Leave the background. I will go to three perspectives from the view of valuer. I will quote two cases which I have investigated, and the perspective of skepticism one of the members in audience mentioned should be an integral part. Today, every audit is a forensic audit. In a lighter vein, it is mentioned, if my colleagues agree with me. That doesn't mean that you doubt everything. For example, sir, I am happily married for 41 years. Go on a red flag basis. Any assignment, including regular audit, valuation, forensic audit, tax audit, anything I am going nowadays with a red flag basis. The less red flags, the more reliability on the documents you are examining. For example, I am happily married for 41 years. I am good yesterday doesn't mean that I am good today. I am getting up in the middle of the night and seeing messages, and when my wife is questioning me sleepily that what is it doing on a continuous basis, she has a reason to doubt me in spite of 41 years of good marriage. Is going lighter vein. So somebody mentioned risk also. Everything is a risk today. The profession, the chartered accountancy profession is undergoing through the turmoil, the so-called baptism by fire. Don't worry about the risk. Without risk, your DNA will not be stronger, sir. With risk only, your professional acumen and skills of evaluation will improve on a radical basis, which I have seen as a former government officer and a chartered accountant and a forensic auditor. Coming to valuation gain, I'll give two cases within the permissible time. In one of the particular cases, it's a large case. I am not disclosing the name. Though Chejjarji mentioned I have done Satcham and all that, there is a dispute of valuation for the timelines taken. The valuer justified the actual appointment is much earlier than the timeline which we GBI examined. I am a part of MDIT there. In another case, the correspondence of the emails between the company which appointed the valuer at the base of the consortium banks, the original valuation report is given, let us say, 100 rupees. Okay. The copy of the email is marked to banks also. and the company has corresponded without marking copy to the banks about the valuation is not reasonable and not sufficient is the word used, sir, in the email, not sufficient. Why I am telling you, every word of yours will come to haunt you tomorrow, as Sri Nikra rightly mentioned. Be careful in the email. Email is a permanent footprint. All these emails which I am mentioning were deleted, which we retrieved in the subsequent investigation. Okay. So, how did the valuation change? When we examined the original figures given at the time of valuation, which arrived at 100 rupees, and the subsequent valuation, which came to 250 rupees, within a period of 15 days, there is no change in the data at all. No change in the data, sir. Then we are surprised. When we questioned the valuer, first of all, he was flabbergasted about the retrieving of the old emails. Second, what we observed when we checked up, sir, simply one factual figure, which is used as a denominator in valuation, was changed. Simply, and valuation became from 100 to 250 rupees, which we have proved in the criminal case, and the valuer also is being prosecuted now successfully. He can't escape. And unfortunately, the company is being prosecuted, valuer is also going down the drain. Second case I'm trying to mention is professional skepticism. Somebody in the audience rightly mentioned. Skepticism should be part of the day. You should not be cynical, sir. You should be a happy-go-lucky man. I'm a very jovial guy. I joke about myself and laugh. That doesn't make me less attentive and less skeptical. Skepticism and cynicism are entirely different from each other. Mark my words, sir. Not only in valuation, in forensic audit, in any case you are doing, be skeptical with a red flag system. The more the red flags, what are the red flags? Obvious. Adverse comments by the auditor, a continuous PNPA, regular bouncing of the checks, and good in the light of good performance, statutory dues are not being paid, continuous overdrawing of the limits, etc., etc., etc. Those who are interested, you can communicate with me. I'll share with you the red flags, which will be helpful to you in deciding to what extent you can rely on the figures, to what extent you cannot rely on the figures. I hope I'm clear, sir. And the third important point, in one of the companies, the company performed very badly for 3 quarters. Let us say the average turnover of the company is 100 crores in the last 3 years. The company achieved turnover of only 10 crores in first 3 quarters of the concerned period, which is relevant to the valuation latest balance sheet. And the company achieved 120 crore turnover in the last 3 months, which is exactly contrary to the earlier trend. In earlier trend, first 3 months were contributing 90% of the turnover, last 3 months was contributing only 10%. And the trend is totally bucked. 120 crore in the last 3 months, 10 crores in the first 3 quarters. Valuer simply accepted the figures. He did not do any skeptical job at all. And he has done the valuation job within 4 to 5 days. And unfortunately, in one of the emails which is deleted and retrieved, I hope you are happy with the valuation. He communicates with the company. I hope you are happy with the valuation. The valuer is not existing to make the client happy, sir. The valuer is existing to do a very thoroughly professional job. This line, coupled with disregarding the trend of the last 3 to 4 years, enabled me in recommending the prosecution of the valuer also, which the CBI is doing now. So I can go on, like Mr. Nikras said, I can go on with 100 examples. He had 20 years experience, I had 40 years. Experience is not relevant, sir. The question I am trying to tell you is the most second importance correspondence with the client. Be keeping in mind that your safety depends on the timelines. Don't go by shortest timeline possible, and collection of data should be proactive exercise rather than a passive exercise. You should have enough evidence to show that you asked for the data and collected rather than simply taking on record the data given by the client. Okay. Similarly, if you go through the potential NPA regular basis is the bank asked him to value for the purpose of enhancing of the limits. Why did the banker ask he didn't ask for the forensic audit. The banker did not, consortium did not ask for forensic audit. They asked for valuation on entity value because of it's a pharma industry. And this gentleman has totally disregarded the other red flags that were existing and simply gave a very beautiful valuation report. The account went to NPA and declared fraud after in the subsequent 3 years. Now examination is going on. So my earnest appeal to valuers is forensic audit is not peripherally connected to valuation, sir. Forensic audit exercise is in-depth and intricately connected to valuation exercise. I am happy to take any questions, sir. I hope I gave a different perspective to you all as an investigator. Chatterjee, I am open for questions, sir. In case no questions, I can take questions subsequently also.
No, thank you very much, sir. Or we'll take it maybe after, maybe we can
Yeah,
listen to.
yeah, absolutely.
Okay,
Puranamji.
so, sir, so, Sharaji, we have a question, I think. Yeah, please.
Yeah, tell me, sir. It's not loud enough for me, sir.
Do we have a mic?
Yeah, like we are online, we are unable to.
Sir,
Yes, sir.
previously the valuers were selected by banks on a ad hoc basis. But
Yes.
now, due to this examination and a lot of programs like this, now we have a very good quality. But only request I found, I mean, I am not a very too much, I am an IP for the past couple of years. So I find the valuer first asks how much you want me to put. And some of them do
Exactly,
not, some of them do not want to enter the premises, some of them do, and bankers tell me, hey, Subramaniam, get it done. So, as you rightly say, we should have the guts to say, as a valuer, what is really deserved. I
Yes,
appreciate whatever he told me, sir.
Sir, one more thing, sir. Subramaniam sir mentioned me. I have seen many valuers failing in writing right disclaimers in the valuation report, sir. Disclaimers. Disclaimers are also a critical part in protecting you, and they are also part of skepticism, sir. I request you to take note of that. Due to paucity of time, I have a long list of things to share with you.
Sir, you prepare paper and circulate among us if we can.
Okay.
Your junior can do that.
Okay, sir.
You give it to us as part of the. Thank you very much, sir.
Sir, you mentioned that the trend analysis for past data was not carried out by the valuer, which in your submission was an anomaly on his part. But in no valuation exercise or standard in my knowledge, or even any valuation technical curriculum or coaching, whatever is done by at any forum, warrants this, what you are questioning.
Exactly. I fully agree, sir. Though it is not a part of the job, he should have taken cognizance of that factor in arriving at the value and mentioning it clearly.
Sir, he does not have the data because
No,
normally
no.
we pick previous
Sir,
period audited
sir.
financial statements
Sir,
and
permit
we
me.
look at the projected financials prepared by the company. Our job is to verify the assumptions and their realisticness. We never get into the past period trend analysis.
Sir, past period trend analysis, don't say that you don't go into that. It should be an integral part of the valuation today if my colleagues agree with me. Correct me if I may be wrong, I am not a registered valuer. But past trend is critical to judge you. Suppose my past turnover is 100 crores per annum. I am projecting 1000 crores. Will you question how you are going to achieve that or not, sir? Past trend is important to you, sir. According to me, I am telling you from the limited perspective of the prosecution now. I may be wrong. I stand corrected. I think Mr. Ravi Kumar also let him
I
finish. Then we'll take questions in the end, sir.
Yes, so I would request Ravi Kumar, sir, please share
Yeah.
your experience to the participants. Thank
Yes.
Thank you, Abhay, Nikhat, Saumit, and Chhatar Kumar, and all those participating. I am speaking as a user of valuation services. So the perspective I am presenting to you is different from the two earlier speakers. I can tell you that in traditional areas, I have seen domestic values are well entrenched. These cover house, a land, property, machinery, etc. So I will emphasize the emerging areas where I have not seen major Indian values present at all. This is dominated by the big four chartered accounting firms or the next four chartered accounting firms. And it's a question I'm posing to ICAIRO. Why is that large organizations that I am associated with, we don't see domestic Indian organizations? Is it that they are not trained or the association does not help them to build the skill sets? This is the first question I am leaving on the table.
Sir.
The second I would say is I must give you a perspective that no longer lenders see valuation as a primary reason while determining a financial exposure. The first safety that we look at is the robustness of the cash flows over the period of the intended loan and our ability to capture these cash flows at source. This is what is the primary reason we look at while determining the exposures. The second we look at is the primary team, the primary person or the family which is behind the organization, their ethical and integrity stance, and their ability in case of difficulties to revive the organization. Nevertheless, as a measure of prudent banking and financial service expertise, we do insist on valuation of assets and ensure that these are adequate in case there is a change in the operating environment. You are aware that in the last 5 years, many organizations have got into difficulty not because they had created problems, but there was you had demonetization, they had GST introduction, they had liquidity shortfalls in the NBFC and NBFC were not giving new loans. Variety of reasons. Banks had stopped lending after 1913-14. They were cleansing the balance sheet. I must also point out that when we choose a valuer, we choose a valuer based on their expertise in that particular industry or segment. It is like an Indian marriage. Somebody comes and makes a nice presentation to me, that does not decide whether we choose that person or not. We look at what is the longevity of the organization, how many more mandates have been done, were there any tricky mandates and how did they handle, if they had problems, what was the cause and how have they emerged out of that problem? I can only say that in the new emerging, in the past cases, because I have now over 51 years of experience in financial services alone, I would say that I have not found one case in the stressed asset space where the property has appreciated after the valuer has given a valuation. Because normally banks do not classify an account as an NPL immediately after the trouble starts. They take a year to a year and a half before they classify. So now RBI has come with very strict mandates. Even 1 day overdue is overdue. 90 days you need to classify, and this is system classification. No longer there is a human intervention in classification.
Yes.
But nevertheless, I would say that even after 2-3 years after the valuation, there is a 30 to 40% lower actual realization compared to value. That puts a question mark on the ability of the valuer whether we would continue giving mandates to such valuers. We must all realize that the money that we are losing is public money, whether it is banks or NBFCs, because NBFCs also borrow money from banks, which is public money. In the forensic audit space, I would say that two major cases that have come in financial services are the DHFL and ILFS. And in both the cases, there were definitely valuation issues, but the major issues were the governance and the intent of management rather than the valuation. Likewise, in the non-financial services, I would say the two major companies that at least I always cite are one is Ranbaxy, its acquisition by the Japanese Daiichi Sankyo. They later sold it to Sun Pharma at a major loss, and Forest Steel by Tata's. I would unfortunately say in both these companies, when it emerged that the companies which acquired, the domestic Indian companies, the Indian promoters or the board, nobody resigned. None of the directors resigned when it was clearly established after 3-4 years gap that the value paid was far in excess of what ought to have been paid. We look at two major areas when we appoint valuers. The first is the independence of the valuers. And I can tell you, you may argue with me till the cows come home, is that we are not confident that a small firm would be independent when we are valuing a large value organization or property. It becomes very, very critical for us that we have a fair value. We are not looking for a particular value. You can give us a value which will stand good stead. You should be able to justify, thump your chest and say, see, my valuation has been correct. That is what we are looking at. And the second is, even if nominally a company is appointing you as a valuer, actually you are in a fiduciary relationship with the shareholders and other stakeholders to the company. You are not in any obligation to the executive management of the company. The valuers must bear this in mind. I must also say, this is a repetition of a point I just now made, is I have not seen any of my valuers at any time highlight in their presentation that they have an affiliation to ICAI Sarvivo. Now, either they are not affiliated or they don't see it as materially enough. I think there is something this particular conference organizers need to do this.
Yes.
In but the main point I am coming to is the emerging areas of valuation where I have not seen, as I earlier said, many Indian organizations. The first is what is already touched by Saumik, the stressed assets area. This is a large area, over 1,20,000 crores, and the ARCs are buying only 10% of it. I am telling you, I mean, just put each of you, listeners, put your hand on your heart. Are you in the valuation of stressed assets? I would say that not even 1% of you would be in this space. The second I would say is that there was a discussion paper, a very interesting discussion paper that Reserve Bank of India put in the month of January in the area of stressed assets. How many of you have responded to that and given your suggestions? If you have not given, has the ICAI RVO given that? If you are indeed an apex valuation organization in the country, should you not contribute to the policy evaluation and given your views on that paper? I would urge every one of you to read this RBI's discussion paper on stressed assets. The last date is over. It was end of February. The policy any day would be coming now. But very interesting questions RBI has posed. And RBI is asking for rational while the replies are being submitted. The second, even larger area is the securitization of loan assets, assignment of loans, and sale of standard assets. Financial year 2023, this is supposed to be over 1,00,000 crores, and this is a repetitive exercise. Each year, over 1,00,000 crores should be sold, and the portfolio has to be valued at the time that it is being bought. How many of you are in this business? The third is we have over 4 lakh crores of international investment into Indian equity,
Yes.
FDI, and for income tax and RBA purposes, fair valuation certificate is required to be provided that the international investment is indeed being allowed at a fair value of shares. How many of you are in this valuation exercise? I can continue 3-4 other major. I refer to the Ranbaxy takeover by Daiichi, of Chorus being taken over by Tata as the valuation. Much smaller valuations are happening, and now valuations have required in the areas of well-run companies taking over stressed assets from in the insolvency proceedings. Have you any of you in this valuation exercise? Many businesses in India have folded up because India today is not the India which was 30 years back. We have changed. Our economy has changed. We are a 5 trillion economy, and next 7-8 years we are going to be a 10 trillion economy. Yes. And valuation is going to be a very, very critical factor. I would urge each of you to familiarize yourself with the new larger areas instead of sticking to the old same old areas of land and machinery, etc. And it is very important for even ICA RBGO to be a part of the evolution of the emerging framework in variety of sectors. I am talking of financial services. I have no time to talk on manufacturing companies. I am on the board of manufacturing companies. It is important that they not only abide by the policy when it comes, but they participate in the policy evaluation, and equally important, they continuous professional development, CPD, of values is extremely important. Otherwise, all of you will become like the mobile handset Nokia, which miss the change in the environment. Thank you.
Thank you very much, sir, for sharing your experience. So if you have quickly, I think with permission, Amit, if we can ask one or two questions to all the three experts we have here today. So I think we can take up, or maybe we.
Later, Chatterjee, may I
Yes, sir.
suggest we can take questions later also. They can communicate with me for the safety's sake. And I hope they should not get in trouble, but when they are in trouble, I am there. As a CA, I am their colleague.
So thank you very much, sir. Thank you, thank you. So I extend a deepest gratitude to all the speakers today. Soumit Nikra physically present, and of course P. Sharat Kumar and P.H. Ravi Kumar, who's here with their vast experience, knowledge they've shared with all the participants here. Thank you very much, sir, for being present physically as well as virtually to all the experts. And I'm sure the participants would be enriched, highly benefited with their whatever time they spoke for 5, 7, 10 minutes. I'm sure you would have really got the insight, the importance of the risk assessment, the valuation vis-a-vis the forensic audit. And just to add of what Sharat sir mentioned about the red flag, I think just maybe if for the members, participants, that red flag RBI of course have a very important circular of 2015. So maybe you can have a look at that circular also, which is May 2015, just to add on the red flag. Yes.
Sir, with your permission, yours faithfully is an integral part of that in RBI, in drafting that. Red flags.
Yes, yes. Thank you. Thank you very much, each one of you and the participants, for your patient listening. Thank you.
Thank you,
Over
sir.
to you, Amit. Thank you.
Thank you.
Thank you very much to the moderator, CA Abhiji, and all the panelists. Thank you. With that, we conclude the second technical session. Thank you very much to Mr. Sharat Kumar and Mr. Ravi Kumar for joining us virtually. Thank you. You just got the glimpse of CA Amarji Chopra ji there. He will be joining us virtually for the next technical session. Sir, I hope you can hear my voice. The tea is running counter outside, so we request that with your permission, we will continue with the third technical session of day 2, but make sure that you can help yourself with a cup of tea and some snacks. Or would you care that we break for 2 minutes? Okay, so we will break for 2 to 3 minutes, but I hope we can come back and then start in about 3 to 4 minutes. Would that be okay? Huh? Tea is outside and snacks is outside. People can come and pick according to their own choice. But let's be back in maximum 5 minutes. Maximum 5 minutes. Please come back. Thank you. कैसे है सर?
Hello.
So welcome once again. Let's continue. I hope you had a nice cup of tea. You can bring your cup of tea and snacks inside as well. Meanwhile, let me take the liberty of beginning with the third technical session of day 2. So the topic of the session is valuation of startups and digital assets, perspective and way forward. Let me welcome the distinguished speaker for the session, CA Amarjit Chopra sir, past president ICI. Sir, can you hear my voice? Amarjit sir?
Yeah, I can hear you.
Okay, good morning sir. This is Amit this side.
Good
Thank
morning.
you.
Yeah, Amit.
Amarjit Chopra sir is part-time member with NAFRA, National Financial Reporting Authority. Please welcome on stage the other distinguished speaker for this session, CA Parag Kulkarni, who is an alumnus of the Harvard Business School and a registered valuer. And may I also invite on stage the moderator of this session, CA Sanjeev Singalji, respected Central Council member, Institute of Chartered Accountants of India. Can we have CA Parag Kulkarni also with us on the stage? Come. First and foremost, I'd like to request the moderator of the session, CA Sanjeev Singalji, to present CA Parag Kulkarni with a flower bud and a memento to welcome him. This is a traditional piece of art. Welcome, sir. Thank you. It's over to the moderator of the session, CA Sanjeev Singhal, sir. Yes. So please join us inside, everyone. We are starting with the third technical session of day 2. Virtual welcome to Amarjit, sir. Sir, we'll start.
Distinguished panelists, the very esteemed audience, it's a very important occasion celebrating the 5th Foundation Day of the RVO. And this topic, valuation of startups and digital assets, perspective and way forward. There is a lot of talk about the startup these days, and valuations are probably at all-time high. And we also need to see that what kind of checks and balances needs to be there. We have two very esteemed speakers, or the panelists for this session. The first one is none other than our own CA, Dr. Amarjit Chopra, past President, Institute of Chartered Accountant of India, having more than 4 decades of experience. And as I said, he's been the president of the ICI during 2010-11 and the chairman of NACAS, and is now a part-time member of NFRA. He has chaired several important committees that dealt with auditing and accounting standards, corporate governance, and banking at the national level, and IFAC, CAPA, SAFA at the international level. And he holds the board position on the board of various companies. We welcome you, sir, and thank you for joining despite your busy schedule. I know you are traveling, so thanks for taking out time for ICI as you always do. The other panelist is CA Parag Kulkarni, who is a registered valuer. He's a chartered accountant from India and England and Wales. He's also completed a CP exam from USA. He's also IFRS certified from ICI. He also holds high honors from NYU Stern Business School, where he was assessed by valuation guru Aswath Damodaran. He's also been awarded with Chartered Surveyor from Royal Institute of Chartered Surveyors. Presently, he's working in valuation assignments in India, US, and Europe. He's completed valuation of more than 20,000 crores of complex financial instruments. And he's working on funding arrangements, and he has conducted national webcast for the Valuation Standard Board of ICI. We welcome you, Parag. The topic for this panel is very clear, the valuations of startups. And we have seen the skyrocketing valuations.
whether it is Zomato or the Flipkart or the Paytms. And when the Paytm stock nosedived, there was a lot of hue and cry that the investors have lost money. So are the valuations correct? At that time, SEBI was asked to look into the KPIs, and it asked its merchant bankers whether the valuation which was given basis the KPIs was right or not. And then SEBI in turn has asked ICAI that can your chartered accountant certify the KPIs. And we have put down very clearly to SEBI that there are certain areas for which the framework, which the gap exists, generally accepted accounting principles, and there are areas for which it will not be feasible for chartered accountants to undertake that. Then a combined group was formed of SEBI and the experts from the Institute of Chartered Accountant of India, and we came out with a guide on the KPIs, technical guide on the key performance indicators, wherein what kind of a certificate can be given and what are the parameters, what are those KPIs which can be certified by the statutory auditors or the independent chartered accountants, and what are those parameters which can't be certified, and what are the internal controls which the management need to put in place, what is the kind of management representations the professionals have to undertake. That's been discussed in detail in that technical guide. So I'm sure that that will help in putting a perspective and also act as a check and balances on the valuation of the startups as well as the digital assets. Because the valuations, when Zomato issue came out, this IPO came out, and it was said that the valuation of Zomato is more than Hero Honda and Domino's. The Zomato person delivers a pizza on his Hero Honda bike. So people were saying that the valuation is higher than Hero Honda and Domino's combined. So what is the methodology by which these valuations are done? The projecting on an Excel sheet is always one of the easiest thing. You can always tweak it to suit a valuation. But what is the sanctity check which goes through for the valuation and the startups and digital assets so that the investors do not lose money? So that is the topic on which we'll be discussing the perspectives and way forward. And let me first invite our Honorable Past President and my guru in the profession, C. Amarjit Chopra ji, for his thoughts on the subject. Over to you, sir.
Moderator Dr. Sanjeev Singhal, and of course the other speaker and the panelist, Mr. Parag Kulkarni, distinguished audience, and of course the various council members, Mr.
Just a second. We are still struggling to get your audio perfectly fine. Just give me a second. So you continue to speak. We're just checking.
What I would like to say is a great privilege to be with you.
The person you are speaking with has put your call on hold. Please stay on the line.
अरे ये तो हटाओ बटन कौन सा दब गया Yeah, apologies for the inconvenience. Let's just give it one try. Sir, hello? Hello? Amarjit sir? Can you call again? Shall we go with the other speaker, sir, first then?
I think someone should speak to Chopra ji.
Okay.
Check his schedule, whether he's available
Okay.
afterwards or not.
Sorry for the inconvenience. We'll just check with him once. So we are just checking with one more wire. अब लगाना wire.
Initially, we were able to hear him very clearly.
Sir, please speak. Hello.
Hello.
हाँ सर एक बार बोलिएगा प्लीज वी आर ट्राइंग
Hello.
हेलो सर कैन यू हियर माय वॉइस
Yeah, I can hear your
हाँ
voice.
सर एक बार बोलिएगा से अ फ्यू सेंटेंसेस
Yeah. Dear friends, it is a great privilege to be with
Audible?
you this afternoon now. Of course, one was supposed to join in the morning. And I must say that with Amit being around, you would be feeling very, very comfortable. Is it okay, Amit?
Yes sir now we are able to hear you please continue
Okay.
thank you
Okay. So, friends, I think this entire topic of valuation of startups and, of course, the digital assets, the perspective and the way forward is a very, very important topic and is attracting the attention of each one of us. And more than us, I think these are the regulators whom the attention is being caught today. Because whatever has happened in Paytm and few of the others startup issues, basically the exit routes which the investors wanted to take, I think it has boomeranged on the various investors, particularly the public. And this is the time that we want to self-introspect as to what has gone wrong and why it has gone wrong, and what precautions we need to take. And this is an era when, at least from the Indian perspective, if I really talk of, a country which is having almost 107 unicorns with valuations of more than 340 billions of dollars and having more than 77,000, you can say, startups today, which is likely to go up anytime further also. I think it is very critical that we really start looking at the various valuations of these startups and what kind of issues are being faced in the valuations. I've always believed in my life that valuation is important both in business as well as in person, because if you conduct a particular business ethically in a sound manner, the management is good, your practices are good, and you want to benefit yourself as well as, of course, the various investors, I think the valuations attached to you will always be higher. And I think it applies to the personal life also. If you are ethical, I think your valuation is always higher compared to the other people. You may not be seen to be as successful as someone else is, but I think the people value you more than the others. Why to talk only of Paytm, and why only to talk of the startups? I think this equally applies to the existing businesses where LIC has been another glaring example, Adani Enterprise has been another glaring example which has suffered on account of the valuation. And I think one of the points which I have been raising and I will continue to raise is, what is the responsibility of the SEBI when the public issues do come in respect of all these startups or in respect of the existing corporates where the valuations are actually higher? Whether SEBI should be looking at it, because in the CCI era, the CCI did used to look at the various valuations in those cases. Valuations, as we all know, may be required for acquiring the businesses. These may be required for actually swap ratios in the case of the amalgamations, investments in joint ventures, various investment decisions, even for the purpose of the disinvestment of the various public sector undertakings, the valuations are very, very important. Now, very frankly, the startups have a very unique role in the economy of a particular country, if you really ask me. From the economic growth perspective, from the innovations perspective, because the more startups coming in, it means more and more of the new ideas are coming into the various entrepreneurs. It promotes entrepreneurship, it promotes employment, and the more sustainable the valuations are, I think the employment also becomes far more stable in those cases, and entrepreneurship also gains as a consequence of that. And more and more startups coming in, it promotes competition also, to my mind, which is a very, very healthy sign. If one has to really start looking at from that particular point of view. And when we talk of the valuations, I think one principle that we'll have to apply, whether in case of the existing businesses or in the case of the startups, that there is no one size which fits all. And every startup may have its own peculiar problems, every startup may have its own peculiar characteristics from that particular angle. Now, there can be cases where, I will not say, rather there are cases in the case of startups. One thing is very clear, that there are going to be founders and there are going to be investors. And initially the equity is divided amongst the founders themselves. But then when the investors come in, probably this equity is to be shared amongst the other investors also. And nobody in the world basically invests in any of the startups for the sake of the charity. Each one wants to invest in the startup because one expects returns. One expects certain kind of an exit route at a given point of time, and basically whether these are the cases of the angel investors or venture capitalists or incubators or accelerators, each one is looking for some kind of a return. Nobody is investing because they know you and they want to do some charity to the economy, or they want to do charity to some of the business people. And they want to make money either on listing or at the time of the merger and amalgamation, or when another investor may come in and their part of their investment may be purchased by him. So I think the valuation becomes very important in all these cases for that matter. And what is more important is that in the case of startups, the complexities in valuations are far more compared to the valuations of the existing businesses. The reason is very clear. The founders and investors have conflicting interests, basically, if you ask me. Founders always want that they should be able to get the highest of the valuation, and the investor wants that he should get some kind of the valuation wherein he can make a profit at a later date when there is an exit route given to the investor, or his net valuation goes up at a later point of time. And to me, what has been very, very startling, and what is very, very important is that there are, in the case of any startup, there is an uncertainty with regard to the integrity and capability of the promoters, which the investor will definitely try to look at, and that may have an effect on the valuations. There is an uncertain future due to possible competition, because if you have developed a particular product in which probably the entry of the competitors is far easier, I think you may not be able to get that kind of valuation which a person will be able to get if the possibility of the competitors entering into that particular business is much lesser. And then there is an uncertainty with regard to the technical and marketing feasibility of the product. So till the time that certainty is not there, I think the valuations it takes a toll on the valuations. There is an uncertainty with regard to the revenue generation and the cash flows because of various factors. One of the factors could be that what is going to be the policy of the government in the times to come with regard to that particular product. And I think the kind of uncertainty which is there of the government policies, even with regard to the tax, now probably both indirect taxes and taxes, it may affect the valuation of the startups in those cases. And then there is a case of, I think one of the major reasons why the valuations have to be actually taken with a lot of care. One is that the mortality rate of the startups is pretty high, and I think no investor wants to really lose the money. and that is why he looks at it with far more circumspect than he looks at in the case of the existing business, because in the case of the startups there could be a case when there is no case history, there could be no similar comparisons. If you look at when Uber came in or Ola came in, there were no aggregators basically in respect of that kind of business, and then valuing that kind of business becomes far more difficult. You look at the case of the Oyo for that particular matter, and then there could be difficulties in respect of the forecasting, and this forecasting is definitely difficult. And one of the things that one will like to say is that whenever we value the startups, we tend to take a higher discount rate of the valuation for the various uncertainties that I have enumerated just few moments back. And when you take higher discount rate, naturally the valuations tend to get lower. And when you take a low rate of the discounting, the valuations may get higher, and that's the conflict of interest. My own perception of the entire thing is that, very frankly, this long-term rate of interest basically and the forecasting of the long-term rate of interest is a very, very difficult proposition. And if I look at the Indian scenario particularly, we used to have the developmental institutions basically in the country in the form of IFCI, in the form of ICICI and IDBI. But these developmental institutions also became banks over a particular period of time. And now their ability, and why if I have to analyze basically why the NPAs became higher in some of the banks basically is because of the lack of forecasting, the lack of ability to forecast basically the rates of interest or the revenue models in respect of the various activities. Take the case of some of the toll bridges. The infrastructure projects have gone bad only as a consequence of this, because the commercial banks didn't have the wherewithal or didn't have the ability to actually forecast the long-term rates of interest and of course forecast the revenues in respect of those toll bridges or in respect of those you can say the projects. So this is one of the very, very important work. And then another thing that one will like to say is that in a country like India, there is a lot of uncertainty with regard to the laws. At times, the environmental laws may take its own toll for that particular matter, or certain other regulations may take their own toll. And of course, the tie-up of the management. If one has actually been looking at the various programs with regard to the startups, I think the valuations the valuations have to be carried out only by the experts, not by a normal professional for that matter. And what is important is that one has to look at the net worth, and of course the angel investors do their own due diligence. And of course, if one has to really go to the methods, one could be the cost to duplicate, the other could be with regard to the value approach and the market multiple for that particular matter. And to me, cost to duplicate is something which can be used by the software companies at different points of time. One can say that how much time the software programming may take and what cost would be incurred in respect of that to replace that. And in the case of a high-tech company, the cost of the research and development, the patent protection, etc., or the prototype development will happen. But it does not represent under any circumstances, to my mind, what is called the future potential of a particular project. And also it does not capture the intangible assets like brand value or the intellectual capital of a particular company. My own approach has been that if I have to really look at it, that market multiple is one of the good ways to look at it, and then the discounted cash flow method is also there to look at it. When I look at the market multiple, it is the value approach against recent acquisitions of the similar companies for that matter. But then whether you will have a similar kind of a startup earlier, I think it's a matter of one's presumption or one's, I think it could be difficult to get that kind of a situation to be in. And it is extensive forecast would be needed basically when the company is at an infancy stage. And what is more important is that the belief in the product and of course the business model would be required in those cases. And of course, in the case of startups, it's more of the revenue multiples that one really talks of, because it may be very difficult to calculate the profitability under certain circumstances, but the revenue multiple becomes one of the major approaches to actually value the startups in those circumstances. But then there could be difficulties in comparisons with regard to the various startups in absence of the information with regard to that. And one of the greatest difficulties that one faces in the valuation of the startups is that even if earlier some deal has actually taken place between some investor somewhere, probably those deals in respect of the unlisted entities are kept under wrap. And you may not be able to know what has been the deal in respect thereof. And then, of course, the other method is the discounted cash flow method. Of course, in this also the difficulty is the forecast for the cash flow, and of course, as I said earlier, the high discount rate would be applied in the case of a particular startup. And all those forecasting difficulties come into play in the case of this particular method. And difficulty of course, assuming the long-term rates in under those circumstances. And this method needs to be used with a lot of care. The best method, to my mind, in the case of valuation of the startups would be more by way of going by the stages. If you ask me of a particular startup, one is that you have only got a brilliant idea, you've developed an exciting idea, you have got an idea which the investor is also trying to look at that, yes, this is an idea which can work and this could be marketable. But still there is no surety about it. But what you are being paid today or what the other person wants to invest is based upon the exciting idea that you have been able to capture or you have been able to develop. And in that case, the investor may not give you too much of a money, but I think somewhere or the other, the valuation would be there for that particular idea itself. And then, of course, the angel investors may use this kind of a method. But then I think the stage of development, there could be a case where there is an idea, but at the same time you have been able to tie up with the management team. The final product or prototype or design has also been developed by you. You have been able to actually enter into some strategic alliances, or you have been able to get some partners or signed off a particular customer base. Now, and if at all there are clear signs of revenue growth and path to the profitability, in that case you will definitely be able to get a much better valuation for your product. So depending upon the stages, whether it's only at the idea stage or you have a, besides the idea, you have a strong management team. After having a strong management team, whether you have been able to develop the final product or you have been able to develop a prototype or design, or you have been able to enter into strategic alliances also, or you have a good customer base also, or you have a clear signs of the revenue growth and path to profitability, I think in those cases the valuations could be much, much higher than what you may be looking at even for that particular matter. So I think it will all be depending, so far as the startups are concerned, the stages of development will be very, very important to deal with. And these will determine as to what kind of valuations you will be able to get in the case of the startups. One has been looking at some of the programs on the TV also, wherein one has seen that the investors really are, first they look at the product, they look at the management team, they look at the promoter, the founder himself, and of course, if everyone is related, they may not look at it very positively. But if everyone is unrelated but having a strong base, one could be on the finance side, one is on the technical side, one is on the marketing side, and one is of course looking after the administrative side of it, probably much higher valuations are attached. And then of course they go by the marketing, and then they look at what kind of valuation you are demanding. One has seen in the programs that people demand the kind of valuation which are astronomically high, and the investors have shied away from that. And if you have been asking for a reasonable valuation, probably they're definitely going for it. So far as the digital assets are concerned, I think this is one area which is very critical today. We all have been talking of digital assets. All over today, the talk is of the digital assets. Digital assets are more of the intangibles basically, and the valuation of intangibles. First, one may have to determine whether it is really an asset or it is not an asset. Whether it is of some use to me outside the organization or not. If it is useful to me outside the organization, if it can give me some revenue, it can give me some profit, it can generate some kind of a cash flow outside this organization, in that case it can be treated as a digital asset. There could be cases of the photos, there could be cases of the videos, there could be cases of the images, there could be cases of customer base, there could be many other ways of looking at the digital assets. But the more important thing in the valuation of the digital assets is that it is more important to find out it may be of some use to you, but if it is not used of no use to a person outside the organization, then it does not attract value. Then the valuation you cannot attach to it under those circumstances. For a digital asset to be of some use, it is important that the person outside who intends to use it attaches some value to it. And if he does not attach value to it, then of course I don't think that you get the value in respect of that. In the recent times, the cryptocurrencies have actually come into play in a very large manner. And these are bitcoins, etc. Why bitcoins is getting a value? Because probably it has got an exchange value. Its intended user has got some value for it. So that is where it is getting the value in respect thereof. And the digital assets can have the utility value or the speculative value, either of the two ways. If it is of some value to somebody at the end of it, probably you might be able to derive the value. And the most important part that one can think of today is that in the case of the digital assets, today the total valuation which is being given to the digital assets across the world is about $4.7 billion. And it is likely to grow at 13% compound growth rate of interest, and it may grow to about $8.7 billion by the end of 2028, which is absolutely phenomenal. Now, accordingly, the valuation in respect of this will become very important, whether these are cryptocurrencies, non-fungible tokens, stable coins, security tokens, manuscripts, e-books, videos, photos, etc. So, what is important to be actually seen is that whenever we talk about digital asset, it is a content which has been saved as a digital file somewhere or the other. It could be even a PowerPoint text for that particular matter. It has no format for that matter. It can be in any form. It can be in any format and capable of being saved digitally, and it can influence the purchasing behavior and of course raising the brand awareness in those circumstances. And I think what is important is that all these digital assets, wherever we find that there can be an intended user to it, some user who has got an intended use for it, in all those cases, it has ability to create business value, and these are all forward-looking assets. These cannot be backward-looking assets under any circumstances. So, I will like to end on one thing here. That again, so far as the valuation of the digital assets is also concerned, it can be based upon asset approach, it can be based upon the market approach, it could be based upon the income approach. So any of the approaches would be okay. But what is important is that valuation of the digital assets in certain cases would be very difficult. When we talk of the photos, when we talk of videos, when we talk of manuscripts, etc., I think what will be more important is that to use it with some kind of a caution that it shouldn't happen that a particular picture is valued astronomically high, whereas it doesn't have that kind of a valuation. Of course, those valuations can be for different reasons when we value them astronomically high. But if at all we want to have sustainable valuations, I think the more important angle is that we should be erring on the right side of it rather than erring on the wrong side of it. So thank you very much, Sanjeev ji, and thank you very much the organizers for providing this opportunity. I'm sorry that I was not in the dress code which is required because I'm outside Delhi and I didn't have the requisite dress to participate in the program. But I thought that even if I'm outside Delhi, I should try to be a part of the program under those circumstances. So my apologies for being underdressed so far as this program is concerned. Thanks a lot.
Thank you. Thank you very much, C. Amarjeet, sir. Thank you very much. Thank you.
Thank you very much, sir. Your basically the guidance is always very, very valuable, and it was a delight to hear you on the valuation of digital assets and startup, the kind of data that you were giving and the kind of, the parameters you were talking was really a treat to listen. I've heard you many times on ethics, on accounting standard, on auditing standard, on corporate law, but this one was really different and truly delightful. Thank you, sir. I now move to our another panelist, CA Parag Kulkarni. Parag, since Amarjeet Chopra ji has already, well explained the parameters and other things, if you can focus on that, what are the key challenges which remains in this area and how to protect the, the interest of the investors with regard to the valuation of startups and digital assets, because sometimes these look to be mind-boggling without a rationale, and in a large number of times they fail to live up to the expectation. If today an IPO comes at a valuation of 1 lakh crores, then it nosedives to 25,000 crore and 10,000 crores. Similarly, if a private equity deal happens at a similar amount, and then the valuation significantly goes down. So why it happens and how to address those challenges, if you can address those. Thank you.
Maybe I'll continue here like a panel discussion, I think. It's more. And because Amarjeet sir already covered majority conversation on the startup, I will prefer to less touch it and rather primarily focus on the digital assets as your question is posed. We can apparently classify digital assets into 5 categories. One is the cryptocurrency. Second is tokens. Third is collectibles. Fourth is domain name. And fifth is software. And in one of the report that we concluded, I could just pull out the framework that we used in terms of concluding the valuation of digital assets. We segregated the report portion into 2 parts. One was on the factors contributing or affecting the valuation. And secondly, the challenges in doing that valuation. So the framework that one can imagine, or all of you can imagine in terms of first, factors that are attributing to the valuation or creating challenges in doing valuation. The first is the law of demand and supply. The valuation of Bitcoin is higher primarily on account of law of demand and supply. The supply is limited, the demand is not. Demand increases, obviously, price undergoes a change. And a price at that point in time is concluded as a value. If the price at that point in time is also supported by the volume of transaction, it fits the definition of fair value within the framework of Ind AS 113 or IFRS 30. The second factor is network effect. when you build a digital asset, how it can be reused or used by multiple people in short span of time is important. Typically when social media platform is created, and including the platform like Zomato's and Paytm's, the network effect play a critical role. And how network effect contributes into valuation, it's something that we need to ponder upon. Here the valuer judgment is on the top line, which is the incremental revenue growth, as well as on the bottom line, because in order to have the network effect, there's also a lot of digital marketing or cost other than R&D and creation needs to be deployed. The third factor is scarcity. And another digital asset which I can connect it is non-fungible tokens, where the asset is created like Mona Lisa painting or a song, which is only where you have only one original conclusion, one original content. And because it's scarce, it brings value on the table. Fourth point is utility and functionality. And Amarjit sir was speaking on the utility side of it, that you create something, but is it really valuable to people outside the organization? So utility, and for example, LMS. You build LMS, learning management softwares, can be used by one university, can be replicated by many other universities. It's a utility. Functionality, which then takes into account the UI UX part of it, or maybe the content and the quality part of it. And last but not the least, the fifth factor which contributes to the valuation is the adoption rate. That okay, you have overcome as a promoter on many other factors, but somehow the product is not adopted by the industry. Like in our case, somebody was saying yesterday that digital valuations are happening, automated valuations were happening, but whether industry has adopted to it or not, that's the question. The second leg of my report included some of the challenges, and I know your question was more on how to address those, but let me first give 4 challenges which we identified. One was on the there is a lack of regulation in terms of digital asset.
And their valuation also.
Yeah, and their valuation also. And I think, yes, back at the ICI, we are trying our level best to build a technical content, if not which concludes on the valuation, but at least facilitate or to certain extent support a valuer in terms of imagining a particular framework that can be adopted in doing those valuation. Second is the volatility. Bitcoin priced significantly high on the one date and significantly less on the second date. The third is obviously the limited information, and last is technological risks such as hacks, because we know for a fact there are people who own Bitcoins or people who own Ethereum, which are not cryptocurrencies but the tokens, or there are people who own digital assets in their wallets, and hackers just pulled out those assets from their wallets into somebody else's wallet. And obviously it also brings the risk factor, which then needs to be translated quantitatively in valuing those assets. This is a framework for digital assets, but we should not stop as a valuer only working inside the framework. We need to also outgrow ourselves in looking at some of the external factors. Which means if there are assets which are traded heavily, then the illiquidity discount need not be offered. However, for newly created cryptocurrencies such as any Tom, Dick and Harry sitting in any part of the country says, this is my currency. For example, we were discussing in one of the other organizations that, let's say if ICI, if we are working together, why ICI doesn't create its own currency? And let members who really attend the seminars will be awarded in that currency, and that can be utilized for purchasing some other materials. So every organization will come up with its own cryptocurrencies, but the volume of transaction is to be analyzed. And then there is a framework in valuation standard that can be utilized to calculate the illiquidity discount if it is so. Yeah, I think my take on this is usually definitions can be inclusive or exclusive. I'll prefer to keep it open-ended as digital asset, as the word digital goes. See, why we are not calling it as intangible asset? Why we are calling it as a digital asset? On the other hand side, digital asset is maybe a subpart of, the intangible asset. Yeah, it is an intangible. And then there is a framework which is specifically available for intangible. So I think we should be more open-ended in terms of defining, if at all we try to define something as a digital asset. That's what my take on it is. We did not just narrow down into cryptocurrencies 1, 2, 3, 4, 5 like I did. I said it can be classified into 5. Tomorrow something else could come in and that may form a part of digital asset.
In the interest of time, actually, if we can focus on that, how to address those issues, because this technical guide on KPI which we have brought out could be one of the solution, because this will keep some checks and balances. There has to be a 3-year history, and the MIS, the earlier valuation should be on that basis. So how to protect the investors. If we can, because I was told by Amit that 12:30 we have to wind up. I know we started the session late, but I think in next 5 minutes we'll have to wind it up.
So I begin saying that first, instead of protecting investor, first let me think of how as a valuer we sit in the framework and we protect our interest. And if we are using our professional skepticism along with due care that is necessary in order to work in an environment which lacks information, then at least we can say that you have performed your professional duties well. If you are doing it well, and if you are taking care of most of the things which are expected by economic participants, then in that sense, even God can't help them if tomorrow that asset vanishes in an air. So that is my first take, which obviously means follow valuation standards, be skeptic, look at internal and external environment. And I'll tell you, let me hit the foundation of this question. In hindsight, people question the value, not at a point in time. If the valuation was not so great, why people subscribe to those assets, including the shares of Zomato's and etc.
That is because of the information, not being properly available. It is more of the hearsay. These are swayed by the merchant bankers. So there has to be some checks and balances. There has to be some basis of the valuation. I think if proper information is available, many of the people will not invest at those levels.
I completely agree. So we all can agree that the value is attributed by the procedures that valuer needs to follow, and obviously we can't have control. I just assume that he has followed those procedures right and information. But secondly, now the external information which also impacts the valuation. So let's give some benefit of doubt to our valuer colleagues who are doing this valuation. Look at the LIBOR rates or MIFOR rates or even MIBOR rates or even alternate rates. They were 3 years back, before pandemic, during pandemic, just before Russia-Ukraine environment, and now amid Russia-Ukraine environment. You would see the interest rates for 1 month, 2 months, 3 months, 6 months were depreciating at a higher rate. On the other hand side, the long-term interest rates, comparatively long-term interest rates for 1 year, 5 years, 10 years and 30 years, they were still depreciating at different rates. So what happens is, when you're looking at an asset at a point in time where the external factors, where the discounting factor, one of the contributing leg of discounting factor is the market interest rate. Now, if you are discounting, if you are valuing that asset in higher interest rate environment, obviously valuation is going to be depressed. Now, some other factors could be lack of information. Some other factors could be because of the macroeconomic environment or the structural changes, the cash flows are going down, but it's a coupled effect. You can't just say that companies have failed business model. these companies must be analyzed not within the framework of 5 years or 10 years. You need to look at it on a longer period of time. And then obviously those valuations must be analyzed. So please understand, the economic value of the business model could still be higher. But because of the current market environment and the inputs that we are using, the pricing at a point in time could be lower or higher. And hence there is a concept of overpricing or underpricing. Thank you so much.
Last thoughts probably, can we have a mechanism? Say, for example, a startup coming out to raise equity through the capital market, be asked to wait for an initial period of time, let some private equity test it. And second, can the valuers as a professional itself, there could be higher checks and balances on the valuer, just like there are enough checks and balances on the statutory auditors. So, can there be higher checks and balances on the valuer? Because, the general belief is that you give valuation to 3 different valuers and you will get 3 different values. So, could there be, and at times these are beyond the range. So, are there enough checks and balances? Or is there a need to have more checks and balances and to have higher professional liabilities?
I completely agree. We need to work on ourselves in terms of our caliber to perform in this challenging environment. Checks and balances can be drafted and they can be formed in letter of the law. But law comes with the practice and later should be supplemented with the spirit. Obviously things go wrong. But like we value the startup, I think we as a valuer are also startup in a sense. And sometimes things go wrong as they will, and maybe I'll do it as a closing remark. I usually say it as a startup anthem, that when things go wrong as they sometimes will, and the road you are trudging seems all uphill, when funds are low and debts are high, you want to smile, but you have to sigh. And when care is pressing you down a bit, rest if you must, but don't you quit. In that sense, as a professional, if there is a care because of the legal cases onto valuers, it's okay. We will rest, we will introspect, we will analyze, but we will bounce back with stronger legal framework with the help of all of you Central Council members, ICI, RVO and IBBI. Thank you so much.
Over to you, Amit.
Thank you very much, the moderator of the session, Dr. C.A. Sanjeev Singhal and C.A. Parag Kulkarni. Thank you very much for telling us more about the digital perspective, and to C.A. Amarjit Chopra sir first to tell us more about the valuation as well. Thank you. With that, we conclude this technical session. I think digital assets are the new learning, like sir rightly said. So the 5 categories that C.A. Parag mentioned: cryptocurrencies, tokens, collectibles, domain name, software. I'm sure as you go off the dais, you'll have many more curiosities on digital assets and their valuation.
Amit
Thank you.
also a digital asset for ICI.
Thank you. Thank you very much. Thank you. So the knowledge enriching sessions continue, and we really appreciate everyone's curiosities and the fact that you're putting in efforts over the course of these 2 days to learn more about different aspects of valuation. So let's hop across to the next technical session, shall we? Okay, so the topic of this session is Valuation Rules 2017, a landmark in the history of valuation in India. So how has the landscape changed ever since the valuation rules have come in 2017? That's the topic for discussion. And I'd like to invite on stage the moderator of this session, Professor Anil Saini, Independent Director with the ICI RVO, Dean and Professor with Guru Gobind Singh University, which is based out of Dwarka. That's the Guru Gobind Singh Indraprastha University. Thank you very much, sir. May I also invite the distinguished speaker of the session. Please welcome Dr. Debajyoti Rai Chaudhary, Managing Director with NESL. You must have seen the stall outside. That's the National E-Governance Services. I request the moderator, Professor Anil Saini, first to welcome the distinguished speaker, Dr. Debajyoti Rai Chaudhary, with a flower and a memento. Let's welcome both with a round of applause, please. Thank you very much. So we've got 20 minutes for this session. So that's the humble request to the moderator to manage within 20 minutes. And I invite Professor Anil Saini to take the session forward. Thank you.
Thank you, Amit. I think the time limit is set because we are standing in between the lunch, right? So, every warm and resounding welcome to the prestigious two-day conference, which is being jointly organized by ICAI and ICAI RVO. And as we gather here to commemorate and this remarkable milestone in the journey of ICAI RVO, which is the 5th Foundation Day, I think this 5 years of recognition of ICAI as a recognized value organization by the Insolvency and Bankruptcy Board of India in the securities or financial asset class. It's really a kind of a testament by the relentless dedication and unwavering commitment of ICAI RVO towards the valuation profession in the country. And today I already indicated that I stand before you as an independent director of ICAI RVO, and I feel privileged and honored to serve as the moderator for this immensely significant session that's going to delve into the very foundation of the valuation in the country. And because this also plays a very pivotal topic we are going to deliberate, that's basically transform the landscape of the valuation as a society. The Valuation Rules 2017 landmark in the history of valuation in India. I think that's the kind of theme which is going to delve into this. To provide profound insights into the genesis of these groundbreaking valuation rules and the dynamic evolution of the regulatory framework, we are honored to have with us a distinguished luminary and esteemed authority, Dr. Debajyoti Ray Chaudhary, with us. So warm welcome to him. He needs no introduction. Still, I think it's my duty to do that. He has got an illustrious career spanning several decades. Dr. Chaudhary's extensive wealth of experience and deep expertise in the realm of valuation is unparalleled, and his exceptional contributions have significantly shaped the landscape of valuation, cementing his status as a visionary leader in the field. Dr. Chaudhary's contribution to the valuation profession are noteworthy, and they are nothing short of exemplary as such. As the Managing Director of National E-Governance Services Limited, NASL, an esteemed information utility organization regulated by IBBI, he has been instrumental in driving groundbreaking initiatives in the valuation landscape. And during his tenure as the Chief General Manager at the Insolvency and Bankruptcy Board of India, he played a vital role in implementing the company's Digital Valuers and Valuation Rules 2017, which is going to have a discussion about. His visionary leadership and unwavering commitment have shaped the regulatory framework governing valuations in the country. And in addition to his remarkable achievements, Dr. Chaudhary is also a prolific writer. Okay, fine, sir. Fine, sir. So, with immense gratitude, I extend my heartfelt thanks to Dr. Debajyoti Chaudhary for gracing us with his presence today and for his invaluable contribution in the field of valuation. So, we request Dr. Chaudhary to please take the session. Thank you, sir.
Thank you, Professor Saini, and good afternoon to everyone. First of all, I'm grateful to ICAI RVO and ICAI for having me here. Yesterday, we learned that this 15th marks the 5th Foundation Day. And I do remember that day 5 years back when I had signed the registration certificate. I was in IBBI at that point of time. And there's one another significant date. And I'm not sure if you're aware of it, but if you're not, please do listen to my session and you'll come to know there's a very significant date which marks this implementation of these rules. Now, the valuation profession has a long history in India. We came to know of this yesterday. But very many attempts earlier to have a comprehensive institutional framework that imparted legitimacy to the valuation profession while holding the valuation professions accountable for these services. So this kind of framework could not happen. We learned earlier that there was an early attempt in 2008, which however did not reach Parliament. There was also a committee of experts constituted under the chairmanship of Dr. M.S. Sahu, which submitted its report sometime in 2020. And this report is still under consideration. In 2017, of course, the valuation rules were notified, and this provided for a two-tier regulatory structure where IBBI has been designated as the principal regulator with multiple competing registered valuers organizations to act as a frontline regulator. I was fortunate enough to be in IBBI during the implementation of the rules, or the valuation rules as it's called. There were quite a few challenges in those initial days. I thought I would share some of that experience, which could provide a blueprint for the regulation and development of the valuation profession. This was, in fact, nothing short of a suspense thriller film. Now, one of the reasons behind the success of the valuation rules was that we realized early in IBBI that a reform succeeds only if it is incremental in nature and builds on the existing institutional framework. So we observed there are very many valuer organizations in India, some of them which had existed for 30 to 40 years, and they had played a significant role. So that's why government amended the Companies Act 2013 to provide that any member to be registered, any person to be registered as a registered valuer, he has to be first enrolled with a registered valuer organization. Now, IBBI had been regulating the insolvency professionals and other institutions like ourselves, insolvency, information utility under the provisions of the IBC, and the learnings there were used in the implementation of the rules. One principle which was used very successfully was extensive consultation. For example, the rules provided for a valuation exam, but the educational course, the syllabus for the valuation exam was not provided, so that IBBI had to decide. Then the syllabus for the examination, the mode of conducting the examinations. So these were issues on which IBBI had to take a decision, and that's why we held extensive roundtables with various stakeholders to decide on these issues. But during those consultations, we came to know of two important facets. One was that based on the rules, many existing valuers who had practiced in the profession for many years would not be eligible. The other stiff resistance was regarding the valuation exam. Many valuers felt that if I have been practicing a profession, if I am proficient in this profession, why should I again be required to give an examination? In fact, despite our consultations, there were a fear among the community. The fear was that a profession which they had practiced for many years could suddenly become out of bounds. A writ petition was filed, and the Honorable Court provided for a stay on the implementation of the rules. It seemed as if the latest attempt to regulate and bring our institutional framework would not be successful. So what did we do? We adopted a three-pronged approach. Firstly, we reached out to all the stakeholders. What we said was the valuation rules were only for Companies Act 2013 valuation and IBC rated valuation. Valuers were registered in the provisions of any other act could continue to practice. And at the same time, we went full steam ahead with the implementation of the rules. Believe me, it was not easy because a question bank had to be prepared for the valuation exam. Modalities for conducting the examination had to be decided. And time was fast running out. The rules were to be implemented from 31st March 2018. On 30th March, one day before, we launched the valuation exam. Fortunately, we had a breather because the implementation was extended for some more time. In the meantime, the legal challenge was continuing. As I said earlier, a stay was granted. So that part also had to be tackled. We made a presentation before the Honorable Court. We said that existing valuers could continue to practice. The Honorable Court was convinced and the stay was vacated. So, and here I am coming to this very important date, 19th July 2018. What was this date? Anyone? 19th July 2018, the first 16 registered valuers were given their certificate of registration. This was given by the Honorable Minister of State for Corporate Affairs, Shri P.P. Chaudhary, at an event at IBBI office. This marked the birth of a very important profession. Now, valuation rules received positive feedback. Many banks, which were largest users of the valuation reports, welcomed the upcoming regulation. Now, we at IBBI, we were not content the fact that the rules were launched, the registration has started. Consultation process continued because we realized even then that there are many valuers who were practicing who were not eligible as per the qualifications provided in the rules. Another issue was a valuation exam, which I had stated earlier. And despite various representations, this was an area which we did not compromise. Although the rules did provide for exemption in certain circumstances, but generally we felt that valuers in general come across various professional backgrounds, and accordingly some basic knowledge of the discipline was necessary to have a check on quality. Moreover, in a country as vast as ours, education institutions have different stakeholders. To facilitate the process, it was proposed to have the educational course prior to the valuation exam. And this would help prepare the prospective registered valuers for the exam. While the initial reluctance of the valuers to take the examination was due to the ostensible fact that it was a subject familiar to them, the experience as far as the valuation exam is that it requires serious preparation and reasonable knowledge of the subject to get a pass. Yesterday, whole-time member of IBBI gave some figures, and as I said, there was initially a lot of resistance, but still more than 13,000 individuals have appeared for the exam. Finally, another important landmark, November 2018, amendments into the rules were again made, which include revised eligibility norms as far as the qualifications and experience were concerned. This marked a closure. The dust had settled, but the journey had just begun. Incidentally, this amendment had certain important provisions which were also affecting the CA community. I mean, because of the paucity of time, I would not like to detail on this, but believe me, this was a very hard-fought victory, because we wanted everyone who seriously wanted to be part of the profession, that they should not be left out. It was also recognized that initial constituents of the valuation profession have a high responsibility, as they would be watched very closely by the stakeholders, and their action and conduct would determine the future of the profession. IBBI worked with the RVOs closely to ensure this. Yesterday, Justice Sekri, in his address, used the word noble in reference to the profession, and that professional should not be guided by profit motive alone. In a very famous case, in the Cushman-Wakefield, in fact, this judgment was also cited yesterday. This was again another serious challenge to the rules. We at IBBI had drafted the writ petition for this. And one of the defense which was made by Union Government of India in its petition is that it is the respondent's endeavor to develop valuation as a profession and not as a business. The endeavor of the rules is to introduce a class of professionals where the focus is on professional skills of the individuals rather than a pure business venture. The Honorable Court in its judgment concluded, objective and intention behind laying the impugnant rules is clearly to introduce higher standards of professionalism in the valuation industry. As I stated earlier, many of the principles which IBBI had adopted very successfully for the development and regulation of the IP profession was also used for registered valuers. Something very interesting, I don't know how any IPs are there here or not, but for IPs, we didn't have a pre-registration course in the initial days. But with the successful launch of the educational course, we also decided to have a pre-registration course for the IPs. Of course, it was slightly different. The educational course for our RVs is held before the exam. For the pre-registration course for the IPs is held after the exam. And it is focused on practical issues. Similarly, we used to have a monthly meeting with the IPs, who are the frontline regulators. So we also started a monthly meeting with the RVOs. So this was just to have a kind of pulse of the industry. What are the developments? What is required? What kind of interventions are absolutely necessary? Another issue which came up during this consultation was about the disclaimers. The valuation rules aim to ensure that the valuation report does not carry a disclaimer which has the potential to dilute the responsibility of the RV or make the valuation report unsuitable for the purpose for which the valuation was conducted. How the scope of caveats, limitations and disclaimers were not clear to everyone, including users and RVs. And consequently, the RVs were having different practices in presentations of caveats, limitations, and disclaimers in valuation reports. Accordingly, IBBI, based on feedback from registered valuers and the RVOs, issued guidelines in the use of caveats, limitations, and disclaimers in the interest of credibility of the valuation reports. So after a tumultuous start, the valuation rules have found acceptance with stakeholders. we register, IBBI registers both RVs and IPs. Initially, there was a close competition between the number of IPs and RVs. Can anyone tell me which is more now, IPs or RVs? Yeah. So I remember the date when the number of RVs surpassed the number of IPs, and in fact it is now more than 5,000 compared to just around 4,000, something over 4,000 for IPs. But the lessons from the implementation of the rules is that there should be some core values in any regulatory mechanism. And I thought I'll just state them before I conclude. Firstly, incorporating changes based on feedback from stakeholders, but without compromising on core principles. So if you see the original rules which were notified in 2017, subsequently changes were made based on feedback. Again, based on, idea was to bring everyone into the ecosystem, but at the same time not compromising on core principles like the valuation exam. Now, a regulator can make regulations, and the regulated have to comply. But there's a cost of compliance. For every regulator, and IBBI looks at this very closely, what is the cost benefit analyst? What are the benefits are you proposing to achieve by having a regulation? Do the cost justify this? So this cost benefit analysis is very important for any regulatory framework. There also needs to be an entry barrier to get the respect of the larger ecosystem. There has to be knowledge management by way of certificate of practice, by way of continuing professional education. A regulator has to be proactive, and this was something which was spoken of yesterday also. Be relevant by scanning the environment. We talked of technology tools while doing valuation. So that's the necessity of the hour. Technology is everywhere today. Standards to ensure predictability of outcomes. Balancing the rights of professionals, registered valuers, and the rights of users of professional services. Monitoring of regulated entities through desktop or peer review or inspection. And finally, and I'll conclude with this, one part which is, difficult part of any regulation, but also extremely important, which is the disciplinary mechanism. Disciplinary proceedings have to be initiated by way of a show cause notice in respect of disciplinary matter, and the SCN has to be disposed of after providing an opportunity of being heard to the noticee, and also by way of a reasoned order. So I conclude with this, and I would only just say that those were difficult times, and this was a hard-fought victory. The rules are there with us. Our registered valuers have gained respect, and let us all do whatever we can to uphold good values of the profession, so the community and at large respects us. Thank you so much.
Thank you very much, the distinguished speaker for this session, Dr. Debajyoti, and also the moderator, Professor Anil Saini. And with that, we conclude this session that was focused on the Valuation Rules 2017. Thank you very much. Thank you. Let's have a round of applause for both the participants. Thank you. So it's a great coincidence that Dr. Debajyoti was the one who signed the certificate of recognition when ICI RVO was recognized. Thank you, sir. Thank you. Okay, so we've got one more session, which is a panel discussion and we've got the lunch scheduled at 2. So I hope we are able to continue with more energy and then break for lunch right after this panel discussion. So we'll set the stage up. The panel discussion is on the topic globalization of the valuation profession, and we've got a very diverse set of panelists. So we've got about 50 minutes for this panel discussion. We hope we respect time and then break for lunch on time. And once we are back from lunch at 3, we have one more technical session, which is one of my favorites, ESG valuation. Like one of the speakers said yesterday, non-financial factors are also now being considered in valuation. I think CM Manoj Fadnis said that. So he mentioned about footfalls, number of apps being downloaded. Similarly, environmental, social, and governance factors. How do they play an important role in valuation? So that's the session right after lunch. And then we'll conclude the 2-day conference with the last panel discussion on the way forward. So stage is set. Let me now invite the panelists. Please welcome on stage, first and foremost, the moderator of the session, Dr. Ashok Kumar Mishra ji, Independent Director with the ICI RVO, former member technical with NCLAT. May I invite the panelists as well, Shri Manish Saxena, board member with the International Valuation Standards Council. Manish ji, a warm welcome. Please welcome on stage Mr. Shankar Bhargav, Director Valuations with PricewaterhouseCoopers, PwC India. May I invite on stage the third panelist, Mr. David Panna, Partner, Valuation and Modeling Financial Advisory with Deloitte. And the last panelist, please welcome CA Paras Savla, Vice President, Indo-Belgian Luxembourg Chamber of Commerce and Industry. May I request the moderator, Dr. Ashok Kumar Mishra first, to welcome Manish ji with flower and a memento. We'd like to welcome Shri Manish Saxena first. Thank you, Manish ji. Board member with the International Valuation Standards Council, and a memento as well, Ashok ji. This is a token of gratitude for being part of this conference. We'd like to request Dr. Ashok now to welcome Shri Shankar Bhargav with a flower and a memento. So this memento is a bell metal artwork of artisans from Bastar, Chhattisgarh. Ashok ji, if you could do the honors and welcome Mr. David Panna, please. Partner, Valuation and Modeling, Financial Advisory with Deloitte. And the memento expressing our thank you for your valuable participation. And Dr. Ashok, if I could request you to please welcome Chartered Accountant Paras Savla. Thank you very much. It's over to the moderator now, Dr. Ashok Kumar Mishra, with the request of concluding the session by 2 p.m. Thank you.
Namaskara, namaskar, good afternoon to all of the friends, and now I will tell brothers and sisters. Let me tell you, being a member I was there, originally I was no doubt Director Finance and CFO of Hindustan Aeronautics HAL till 2015. And thereafter, in the first batch of NCLT, I was selected in NCLT, then I was elevated to NCLAT as technical member. Time being, my knowledge on this subject is very low. So, let me confess it first. Although the team ICAI RBO has considered me fit for RBO, this moderator, but I am telling you. But as a technical member, I can tell some of the examples when we were in the bench. There were cases which, when it when that case was being heard, at that time we found 3-4 years back, valuation has been done. Value was something like over 700 crore. And within 3 years, the company has gone down like this. How it can happen? In one of the cases, I still remember, that was of Punjab National Bank of relating to the state Punjab. So we asked that banker, how it has happened, who has done valuation? Good or bad, when he told a chartered accountant, I was a bit weak. What to do? Then my brother, that is the presiding officer of the bench, told me, Misraji, let it better to call that chartered accountant what type of valuation he has done. So with a note of caution, I can only tell you, friends, although section 247 you all are well aware, it has not only the monetary penalty, but it has also criminal angle also. And so we should not take the things easily, because the law very clearly says, as far as my knowledge goes, sitting on that chair, that whatever we should do in accordance with laid down standard. Now ICAI itself has formulated a standard, time being that is only enforceable, so we should be cautious. Now I don't have much thing to tell other than Mr. Saxena, all the panelists here, Mr. Manish Saxena, Mr. Shankar Bhargava, Sri David, Mr. Panna, CA, Mr. Paras Savla, all are renowned persons in this field. They need no introduction. So I will not like to take it for a long. I can only tell you which I should do while giving the thank, that acting CEO of ICAI RVO is very much instrumental in bringing this Foundation Day ceremony. With this, let me start the moderation work. Thank you. So there is a suggestion, I think. You see, basically, I will not like to go in much question-answer session. Rather, let the floor be open for questions from your side. But initially, to pick up the first thing, I will only say that anyone from the panel, they can clarify this issue, that the adoption and enforcement of Ind AS have had on Indian valuation, what is the impact? One of you who are expert, either Mr. Savla, is a chartered accountant.
I can go first. Am I audible?
Yes.
Yeah. So, just as an introduction, apart from a IVSC board member, I also work with EY. I'm a partner there, and I lead around 600 member team. And the biggest chunk of work that we do as part of our daily work is financial reporting valuation. And before that, I was in Grant Thornton. I was leading the valuation practice there. And there also the biggest area of work that I was doing was financial reporting valuation. And as a practitioner who has spent 20 decades in the Indian market, I can tell you the adoption of Ind AS in India has had a profound effect on the valuation profession. I remember around 15 years ago, or even 20 years ago, we used to do a handful of purchase price allocations or impairment testing for clients, Indian clients who were listed outside India and they were following IFRS or US GAAP. But since 2015-16, when India moved to IFRS, which is the Ind AS IFRS equivalent standard, the market opportunity significantly increased. Almost every company in India now follows IFRS or the Ind AS, which has created immense requirement for fair valuation, and that is where valuers like us are playing a critical role. So to answer your question, the first impact I saw was a significant increase in the market opportunity for valuers. The second biggest impact I have seen from Ind AS adoption is the is the quality of valuation itself has gone up, because unlike the erstwhile in Indian GAAP, there was no guidance on how to do the right valuation. But right now, if you look at IFRS or Ind AS, there's an entire standard which is dedicated on fair valuation, which is Ind AS 13. So anybody who does a valuation for financial reporting has to do the valuation as per those guidelines, and that really is improving the quality of valuations in India. So as far as I am concerned, it's a huge positive impact, not just for the audit profession, but for the evaluation profession as well. Maybe other panelists, if you have any views.
The India has given certainly new opportunities for the chartered accountants or valuation professional to work on it. But it has also, because the new methods which are there, which comes through India's, this also need to be require relearning some certain things. When you're doing a valuation based on India's financial statements and you're doing a net asset method for the purpose of income tax valuations, 11 UA, you can't adopt what is the balance sheet values as it is, because it requires so much of the understanding there, what is to be excluded, what not to be excluded, because recently we are doing one of the exercise and we need to nearly scratch our head that what types of items should be excluded, what adjustments to be done. Because in India, you always bifurcate to the equity and debt, even though instrument is on the equity side of preference share. So this throws the new opportunities, new learning on the valuation professionals. You can't adopt as it is. Certainly the India's provides the fair value, which is on two sides. It's not only what the reflect market condition, but what is also expected in the markets. So both things are being capitalized in the India's valuation. It's not that only that what is market, we'll throw it that way.
Hello. To what Manish and the other panelists said, I'll add two more things. I think what I've seen in the last 5 years is, from a positive perspective, I see a lot of talent wanting to join the profession. There was a time when even to get people to get into valuation was not an easy task. Today, I see a lot of youngsters, a lot of professionals who are chartered accountants, who have done MBAs, wanting and approaching us to get into this profession. They want to evaluate it as a career option, and if they like it and if they see that it builds a career, they wish to embrace it. The second point is, I think apart from, and I totally agree with what Manish said, the quality of valuation opinions have definitely gone up. And I can say that for certain because a lot of the valuation reports I see in my capacity as a partner in Deloitte, we see it from firms who are across the spectrum. The rigor with which the valuation is being done today is far greater. The tools, the techniques that they are using is far greater. People are more aware that it has to be scrutinized, and I think it works both ways, because that report is being challenged by the auditors who are going to sign off. They also go back and do a far better work. The kind of evidences that needs to support that valuation has become better. So the adoption of India's has had this kind of a rub off. The other thing is, when people really talk about valuations, most of the people will stop at valuations of business or equity and land and plant and machinery. What India has taught us is valuation of intangibles. You also get to learn as to how do you value something like a brand, something like a trademark, something like any in-process R&D, technology. And all these things are very relevant because today corporates are moving these assets from one geographies to others. And those things require valuations, not only for India's, but also for doing kind of transactions as such. And you get familiar with those techniques also. And he mentioned about financial instruments. That's something, India's has again thrown in. Like you need to do accounting of any money. So I heard the session on private equity. Private equity money never comes as equity as such. It never comes as debt. And the accounting standard, asks you to divide the two between whether it's a debt or an equity, and there is a huge amount of derivatives. Today, a lot of compensation that is being given to employees are in the form of employee stock options. It's not as simple as what we used to earlier do, Black-Scholes. It's linked with performances as such. And India's forces the auditors and the management to ascribe a value to it, but then creates a business opportunity for the people in this room as such.
Thanks, David. Just a couple of points. I think the adoption of IndAS has been phenomenally helpful in globalization and putting Indian valuers and our ecosystem on a global playing field that everybody looks at, respects, and understands. So with the advent of fair value, with the advent of standardized complex methodologies to value intangible assets, financial instruments, not only did IndAS make us valuers in India focus on consistency and adopting the latest and greatest methodologies that are globally prevalent, but it also gave us a space to interact with other valuers across the globe in multinational transactions that are getting more and more frequented, where a buyer or a seller globally understands that, oh, this is IndAS, which is very, very close to, say, IFRS. And so I am familiar with how these financial statements have been made from a valuation perspective. I'm familiar with a business combination analysis that a valuer has done here in India with more ease and acceptance than what was there before.
Now another question, and thereafter we'll leave the floor open. Can I think panelists can clarify what is the revolution of valuation practices that we have witnessed in India during last few years?
Sorry, David, after you. So I think that, it's been summarized over the day and a half, but I think it started with a need for consistency, a need for transparency, and a need to minimize valuers' judgment in a way that is detrimental to financial statements. I think that's how it started globally. I remember that, OECD, etc., in the 1990s started talking about fair value, and then it prevailed. That discussion continued till the financial statements in the US, I think in 2006, came out with the first pronouncement on fair value measurement. And thereafter it trickled across the world, IFRS, and then now in India. So I think the revolution started there, and there are multiple components to it. To summarize, I think IndAS was a major arm in that revolution to help us reach where we are today as valuers. We spoke about the rules 2017 and before, and that's where the registered valuers and the Companies Act giving them that position was another very important aspect. And all of the changes and the consultations that take place regularly to improve that have brought us to this stage where we can stand up as valuers here in India and say that our processes are very much streamlined and world class.
Dr. Saab, it's a revolution in progress, and I'll just cite one incident. So I did some expert witness work also. So if there is a joint venture dispute and they go to a court, and if you've signed a valuation report, you are you're called on to dispose, and there is a cross-examination. Invariably, the first question that used to be asked was, is there a standard by which you have followed and the valuation has been done? Till we had the Companies Act rule, which the panelists before me said, the answer would typically be that we followed an IVCA or an international rule. Today, and I think that's one of the biggest change in my opinion, that's really the revolution. Having that framework today, where in a court of law, when you are going to be judged, where your valuation opinion is going to be judged, you can stand up as a valuer and say, I've followed these rules, whichever statute, which has a constitutional backing. And I think that's the biggest, in my opinion, the revolution part of it. And we don't really, see it as a revolution because we are living through that. Somebody who has an outside view, like Dr. Saab, when he, went through the pain of putting up a framework, I think when the generations after us come, then they will realize as to what has happened. So in my opinion, it's like a revolution in progress. It's by no means over as such. That is there. And that really is, to me, is the revolution for the profession in India that's happened.
Yeah, so as I mentioned, I've spent quite close to 2 decades in the Indian valuation profession, and I can clearly say that there has been a significant change over the last 2 decades, and as David mentioned, you can call it as a revolution. And if I reflect back on what has really changed in the last 2 decades, I mean, there are 3 key milestones which come to my mind. I think 2 we have already spoken about. The first one being Ind AS, when the companies in India moved to Ind AS. That was a key milestone which changed the valuation profession. It increased the quality of valuation. It increased the requirement of valuation. This happened around 2015-16. The second change, which again we have touched upon, is the registered valuer rule, which itself was a huge change. And what that led to was, first of all, recognizing valuation as a profession. I remember when I started my career, there were a lot of teams and firms where there was no separate valuation practice. I mean, there were people who were doing part-time valuations. And that has now evolved to a level where you need to be a registered valuer to even sign on any valuation report. So that's a big change because it creates accountability, it improves the quality of valuation. The third trend which I've seen, which is very unique to India, and it's not really a milestone, but and having worked in the offshoring model as well as the Indian providing services to Indian clients, what I've seen is there are 2 industries in India, 2 valuation industries in India. One which offers valuation services to Indian client, and there's a huge amount of people and companies who are from India delivering valuation services to global clients. And that's, I feel, is a bigger industry than the Indian clients. Now, what that has done to the Indian valuation profession is that there's a positive side and a negative side to that. The positive side is that because of the exposure to global engagements, it has created a huge amount of talent who has got exposed to global methodologies, cutting edge tools, and they are now providing valuation services to Indian clients. So that has really helped in improving the quality of services in India. So that's a very positive trend for the Indian valuation ecosystem. But the second, which is slightly negative trend, which I have seen over the years, is because of the offshoring sector requiring a lot of talent, and in the offshoring sector, they're able to pay much higher to people because they, when they offer services to clients in US, they earn in dollars and pounds. That has attracted a lot of youngsters to this industry, and that has created sort of a talent scarcity for the Indian market. And that is something a lot of Indian valuation firms are struggling with. But I'm sure over time, when the Indian valuation market matures, we'll have a lot of that talent coming back to the Indian market, and that will be a good sign for the Indian valuation profession. So those are some of my thoughts.
So what other panelists added, I'd like to add one more thing here. That earlier we used to have only one valuation report for one type of transactions. Now same transaction will require multiple valuation reports. So probably this, I believe the regulation wants to have a checks and balances in on the valuation report, rather than we say that it's against the principle of ease of doing business, that why one transaction having a require more valuation reporter from the different professions. This opens opportunities for the different type of professionals to be in the field. At the same time, we are moving from monopoly to the oligopoly or monopolistic approach in the market, where the multiple players are available, where the report can be scrutinized by the multiple players, and inbuilt checks and balances can be seen in that report, so that the if you find anywhere any aberrations are there, that can be taken care of it.
I think I will request one of the panelists to clarify. While I was in NCLT and NCLAT, because everybody knowing I'm PhD in finance, chartered accountant, so all heavy cases they will give me. One thing I wanted to be, I need help from other such a expert professionals, which I was unable to answer to my presiding officer, that is the judicial member. They were asking, Misra ji, 5-6 साल पहले we have done the value, they have given the valuation report, value was so much. How this company, now it is like that, bank based on the valuation report has given so much money in 200 crore, 300 crore or maybe in 1000 crore. Now how it has come down suddenly in 5 years, 6 years or 7 years. So to be very frank with you, sometime I was feeling also very odd how it is happening. And in some of the cases I was feeling that I don't know these, because these regulations have come from 2017, cases were for earlier periods when there was no such regulation. So most of the chartered accountant have done it. Now I don't know how this variation happens in 5-6 years. They can only assist us so that in future I can answer now as a professor.
I like to answer that, because this is a unique profession where you are called upon to justify an opinion where everybody else has the benefit of the hindsight, So let me just, try to give you a flavor, and that's where, he's here from IBBA, and I wish there were regulators also. Typically when we are looking at a valuation report, it is as of a particular date, and you're looking at it today. All of us are wiser because all those things have already transpired. Do you go to let's say, a heart surgeon with your report which is 5 years old saying, मैं तो बिल्कुल ठीक था, look at all my parameters, and here you're asking me to go for angioplasty? And this example, I thought of it right now. No, that is exactly what we want. That is what we are telling the valuers to be. We are telling the valuers, you should be a crystal gazer. You should be a magician where whatever value you give today should hold true even 5 years later. Tell me which asset class. And it's very surprising, you don't need to be a valuer. A regulator does not need to be a technical person. A judge need not to be a technical person. Any asset he would have purchased, he can easily, make a distinction. If he purchased a stock, or let's say Reliance or Tata's or any stock, does the value does not change over 4-5 years? Or a house, or a brand, anything. Valuation is always as of a particular date, So to answer to your question, you do the valuation as a particular date based on what was available as of that date. What was the cost of money? What was the industry outlook? Today, last 1 year has been fantastic to explain this point actually. If we were doing valuation of any company in May of 2022, with nothing else changing, the business prospects, everything, still the valuation would be 50% down today. For a simple reason, because the US of United States have raised the risk-free rates from about 0.5% to about 5.5%. That's what impacts the valuation. So I think there is a lot of maturity that has come in the system from a valuer's perspective. I don't see that maturity coming at the regulator or or people who are looking at that. They believe that a valuation to be done of a bottle should be constant, irrespective of from whose perspective you're looking at it. And I think that level of maturity will come, but it will take time. As a valuers, I think we just need to be mindful that whatever we do, we follow the process, we look at the rules, we look at all the evidences. The other thing that happens is typically they'll say, if things go wrong, aapne ye nahi dekha. The challenge is you always have a benefit of hindsight. You're making the best professional judgment based on the 5-6 things that are impacting the valuation, the maximum. But there'll be 50 other items that a valuer or a valuation firm, no matter how good they are, they cannot predict, they would not look at it. And if you wish to beat a valuation report at a later date, there are tens of ways of doing that. What we need to look at is whether there was a malified intention, whether the person had a conflict of interest, whether they got influenced not because of lack of maturity, but because of some inducement. Those are more serious charges in my opinion. So to answer your question, that's why the valuation changes. Forget about 5 years, sir. 6 months में change हो जाता है.
Why not after 6 months? मैं आपको बड़ा क्लियर, मैं बैंक ऑफ बड़ौदा का ऑडिट कर रहा था, उसमें ही मैंने ये क्वेश्चन रेज किया. मैं कही जो 2002 से लेके 2009 तक जो देखी ना बिल्डिंग्स हैं, लैंड एंड बिल्डिंग जितनी भी प्रॉपर्टीज थी वो इंक्रीज होती रही. एक उसके बाद में सैचुरेशन हो गई, उसके बाद में डाउनफॉल आ गया. मैं कही मैं रिजर्व बैंक ऑफ इंडिया को लिख देता हूँ कि ये आप इनकी वैल्यूएशन जो 3 साल वाली है इमीडिएटली कराइएगा ताकि आपको क्लियर है. उस समय भी मुझे जो इंस्पेक्शन के हेड थे उन्होंने कहा कि सिंगला साहब हम आपको डिप्यूट करते हैं, आपको हमारे पैर के ऊपर कुहाड़ा मारने के लिए हम आपको डिप्यूट नहीं करते, आपको साइलेंट रहना होगा इस चीज़ के ऊपर.
सर उसका नहीं, उसका एक और रीज़न है. आई थिंक there is a historical reason also, when we were growing up or something like that, when economy was not that open, so I'm talking about maybe 15-20 years back. In India, usually you'll never have a situation where real estate loses value, right? I don't think so. हमारे parents का generation, उसके पूरे parents का generation, because it's a growing country, the physical assets were never losing value as such. Money was not as such. What you're saying is more prevalent now, where real estate values could fluctuate much more than what is there, because there's a lot of speculation that has been built into, because there's a lot of money that is coming. So you're right, कि valuation regularly होना चाहिए, but I can see where the regulators are coming because they have seen over a much longer period of time. When you want to change something, as he said, you cannot do a change very harshly. You have to do it incrementally. That incremental thing will happen. It will happen when people do realize कि जो collateral की value वो ले रहे हैं वो suddenly बहुत गिर गई है. तब जो चीज़ आप कह रहे हैं वो regulator या bank खुद ही करेगा. हमारे आपके बोलने से नहीं होगा. When the stakeholders feel the need for an updation regularly, that will happen.
सर मैं बड़ा देखना with the fold hands मैं ये कहता हूँ, हमने सब प्राइम को भी देखा था यूएसए में, देखा था नहीं, वो कौन से ईयर में देखा था. अगर रेगुलेटर सतर्क नहीं होएगा तो उसका खमियाजा कहीं ना कहीं पब्लिक को भुगतना पड़ता है.
बिल्कुल ठीक कह रहे हैं सर.
Sir, I have one more small question. I think once IBBI has got into and created such a, I'll say technically far richer class of valuers, and the other valuers are continued because they have been continuing. I think I have nothing against the other valuers. Let them continue as much as the time the banking regulator wants. But at least the standard of work performance should be uplifted, and the same benchmarks which are applied to IBBI registered valuers, those same benchmarks should be applied to other valuers. And banks, without understanding that their reports, the formats which they have prescribed, meet these valuation standards or do not, whether adequate valuation evidence has been built into the report in the format in which the report has been prescribed by the bankers. They keep on running the formats which were designed maybe 35, 40 years back, which have nothing to do with the present times, just clicking 5 photographs, putting land measurement, multiplying by circle rate. I think that kind of valuation, even a banker can do, even a client can provide a certified report. A valuation experience would be when you do a replacement cost value, you do a realizable cost, whether that land can be sold in market, whether there exists a market. There are several stuff which valuer needs to test for, when such honorable jurists give such remarks that after 5 years when NCLT found that valuation, it was not proper. I think it was not proper because the valuer had not done those 10 tests while determining the original valuation. Otherwise, it would have definitely risen. There was no chance for it to fall.
One, I don't think so it's the right panel to answer that question as to why bankers are not doing that. Having said that, I think one thing I always feel, when we started, I was one amongst the first few registered values actually. There was a lot of, anguish amongst us, and I'll see, कि ये होना चाहिए, ये होना चाहिए, ये होना चाहिए. This is the prayer. I think the better way to do it, because, the buyer of our services will buy when they feel they are ready about it. Please don't look for regulatory interventions to do that. As we mentioned, there's a whole new areas of valuation which is much more rigorous, which is much more better paying, is there, India's valuations. Firms which are registered under alternate investment funds, I think they're regulated by SEBI, I don't know.
It's regulated by SEBI.
SEBI regulated, so they are required to get the fair valuation done on a regular basis. And today, you would be surprised, there are hundreds of such, alternate investment funds. Please go ahead and look at opportunities there. Don't go and, don't whine for something which is not there. When it happens, it will happen. It's not a very kind of thing. There are so many other areas. There are so many other things that you could do. And it's like exploding. I would want you to, go back with this message. Please don't look at something which is not there. That's a constraint. That is, we can't control that. We can't tell a banker as to how they should get a valuation done. That's their internal matter. Please go and look at business where, they need that. And there, actually, you will add more value. A banker is just looking for a collateral number, but when an AIF gets a fair valuation done, basis your fair valuation, they can go and raise more money. The auditors who are auditing them are signing that off. The intellectual satisfaction you do get, the kind of people that you interact there would be of a far different quality. Why do we want to, spend our energy and time doing, hopping about bankers, 30 years and all? Don't do that. It's a serious waste of our energy, in my opinion.
So I'll just add one more point here.
Let me tell you, your question was good. Mr. David has explained it. But I can tell you one thing. Chartered accountant, because I have my bench partner, we are both Supreme Court judge, senior Supreme Court judges, very, very senior, and both High Court Chief Justices. I have seen one thing. They have a faith in chartered accountant. Once a client tells that this is the certificate I have got from a chartered accountant, I used to see the presiding officer, that is either a Supreme Court judge or a Chief Justice of a High Court. They used to respect you. Your standard is very high. And I think ICI is also working on, because presently we are recognized perhaps for SFA class only. So ICI with the team of MD and acting CEO, they are trying hard to make it for all other streams also. So sooner or later you are going to get what Brother David has suggested, Mr. David has suggested, that you can look for some greater opportunities. Because what he is telling, maybe that some of the things I am not aware, maybe all of you are aware. So there are markets in other fields. And let me today tell you, valuation is an area which is going to become like a statutory auditor, a part of life for every organization, for every movement. So we will have a great opportunity. ये मानना पड़ेगा
Go ahead. No, let me just answer that with an example. Let's suppose you have an S-Class Mercedes and you know it needs a paint job because उसका scratch हो गया paint और आपसे बोला जाता है कि please इसको जाके आप paint करवाइए. So as a person who is responsible for doing that, what is the question that you're going to ask? That competence हम कह रहे हैं कि सबके पास tools, techniques, big fours, of course, few of us are from big fours and all. What is the question that you will ask that whosoever is asking you to get a paint job? आप मेरे हिसाब से आप ये पूछेंगे कि ये गाड़ी किसकी है, correct? If that car belongs to, let's say, the US ambassador to India, irrespective of whether the roadside garage can do a best job of it, do you think he will go to him or to the Mercedes guys? Let me answer this question in something else. We'll say, few years back, as part of Big Four only, we had invited a client for one of our conferences, and the question that we were asking them to address all the partners was, what is it that Deloitte can do to them? What is it that, So he gave an answer which stuck in my mind and which kind of summarizes, and when you go back, please think about it as to why somebody makes that decision. It's nothing against that. He says, if I were to choose Deloitte for a particular job, and when I go and tell my board, they should not say why Deloitte or who Deloitte. So a lot of work that government gives out and all, they have stakeholders, they have somebody, they have two things in mind. If they have to tomorrow answer public scrutiny or CAG or something like that, they have to demonstrate as to who they gave the work to and why. And secondly, they are also interested in getting that work done, correct? So as soon as you have that, so there are a lot of jobs which Big Fours also, so it's now become a very muddled world. So there is a lot of implementation. Let's suppose we are doing a work which is to, in Uttar Pradesh, which is a $1 trillion economy. I don't know whether you guys pick up that news, but Deloitte is assisting them. But Deloitte didn't win that work on its own. They were competing against a whole bunch of other consultants. So when you do that, you also see as to do that work, whether it can be done by a 1 or 10 man shop, or do you need, let's say, a firm which has got 100 people or 200 people. Unfortunately, the person who's giving us work, if that person's reputation is at stake, then they will want to associate with somebody who is careful, and if the work goes bad, then their reputation also gets impacted, So it's nothing against, it's not a question of big or small, Indian versus that. It is who is giving you the work. If for them there is a reputation risk, they want an advisor, a consultant, who if they do a shoddy job, they also lose as much as they do. And if they were to sue them tomorrow, then they can recover the damages. What will you get by suing a small firm? Nothing. You can just shut them down. But the damage that they would have undergone in terms of non-delivery of work would be phenomenal, right? So, please see it from that perspective.
Well, just to add to this point, I think apart from the factors which David mentioned, and I've worked in small firm as well as in one of the big fours, and I've seen the views from both the sides. One other reason why some of the larger MNCs or companies prefer to work with Big Four on the valuation side is because they feel that the independence of a Big Four is better than a smaller firm. So, they feel, and that's a perception, I'm not saying that's the fact, but there's a general perception that if a large firm is doing a valuation, the chances of that firm being independent is more than a smaller firm. So that also is a reason.
There is a practical aspect to it also.
Sir, how will you explain the ILFS one where only Big Four is involved and some legal action which should be taken, somebody may be put behind the bar, or big companies involved. Sir, one thing I want to tell you, if they give me the speaker, just give me. Can you give it to me? I'm sorry. It's not a battery. Guys, this is a battery. वो भी अच्छा, battery वाला दे दो. पैसा दे रहा हूँ यार. I am not a free person. Hello, sir. I am a CPA from US. I am in the panel of American Embassy and other places. I compete only with the Big Four because the problem with Big Four, they will never pick up a telephone from a small man. Small man, I am not talking some in. See, my client has to be in crores because then only you file a tax return in America. So I deal with them one at a time. So now, yes, I can't compete with you. I can't do, but as you rightly say, I am able to generate lot of business. Once somebody comes to me, he is so happy he will never go back to you. But I cannot say that, he should not come back to you, because first he will give you a ring, you will not pick up. Because you are two big people,
No,
Hey, 1 minute, sir, I am telling you, that is an advantage to me. Then you will pick up and tell me, sir, I telephoned there. I say, why do you go? They're too big to fail. So come to too small, man. But I took the opportunity. I write a lot of articles, so people know me throughout the country. There is somebody called Subramaniam. So his question has to be in that context. But whatever he said, I don't dispute, sir.
It's a fantastic observation, sir. The size really makes, the speed and size never go together, right? If you're seeing as a big shape. The second part is actually just to answer that question about Manish ne? हाँ.
This point I agree with.
I'll just answer that. Just for the two parts, actually, you're right. Nobody's saying that, actually. So decision making is actually slower in bigger organizations for two reasons. Not because they're too big. The conflict of interest is taken very seriously in bigger firms, right? Because the reputational risk is there. So if a client approaches us, we can't say I can do the work, because I have to check my global system, and unfortunately if it's a US firm or something, that risk checks itself goes to the US firm, to all the geographies, to figure out that if they need a valuation, can I do it? If I'm an auditor, I will not do it. If I'm doing a consulting work, I will not do it. That process itself, slows us down. So obviously, that gives a huge benefit to smaller firms than if you're not doing that. Boss, if you start doing work for PSUB clients, you would be surprised as to how much of information you have to supply to them, actually. So in audit, there are two aspects to it. One is called a control issue, so as to who has... Huh. Of course. Absolutely.
I also look at it as a learning exercise. Well, I have been on the other side where my valuations get questioned by the auditors, and it's painful at times, but it also improves your valuation skills. If you just do a valuation and it gets accepted and you don't know how it's used, then you feel you have done the best job, right? But when the auditors, specialists are questioning you, it also helps you improve yourself. And so I take it that way, as in a positive manner. It becomes cumbersome, but it also helps you to improve.
And I think to that point, and I've seen this both. So I spent half my career working in a big four in the US and more than half my career working here. When we are getting cost questioned by the auditors, it's a thorough cost questioning that starts. The demarcation is simple. Demarcation is if there is something around the business or projection, etc., they'll ask the client. But anything related to valuation, whether it's where did you get your beta, all the way to what kind of multiple have you chosen, that nitty-gritty I have always seen people asking. And most of the time, it's welcome for two reasons. One, if it is coming from the right place, it ensures the rigor and accuracy of a valuation, irrespective of whether a big four is doing it or some other person is doing it. The aim is not, this is so-and-so, his valuation must automatically be correct. If the thought process is my job as an auditor or a consultant is to ensure the accuracy, and I'm asking from that perspective, then those questions, in my opinion, should be welcome. because it goes towards ensuring that the system is intact. It goes to ensure that, you know, our regulators are okay with the valuation, it's accurate. And so from that perspective, it's painful, but we have to go through that process.
Okay.
Anyway, the auditor also asked, relying on the auditing standard, on the relying the work of expert. You can refer it, and if you think something is beyond that standard what specifies, you can react. But anyway, giving something shows your robustness of your model, of your working. And if the auditor is satisfied with this working, you will generate a business from it in future.
Now time for closure has come. I think this panel has left a lot of open deliberations on this subject, which we are in a position, we have tried to tell you, because all of them are expert in their field. While the questions were also very strong, I can tell you one example, because relaxing example, because lunch is waiting for us. Justice Hidayatullah told, even if the Supreme Court order is challenged to some other high court, 1/3 of the judgment will be reversed. When because I was also monitoring while he's in NCLT, कि मेरा NCLT में how many judgments are getting reversed, it was incidentally less than 5%. In NCLT, it was further lower. But I used to ask chairman why judgments are changed. Then he told me this sentence of Justice, Honorable Justice Hidayatullah. So I can only tell you, neither big firm or a small firm. As a chartered accountant, you all owe a great respect from all the government machinery and judiciary. Sometime there has been some problem because of some brother getting or sisters getting into some difficulty. So whatever the concept they have explained, let me tell you, I was big zero. Now I think as a professor I can explain something on valuation. With this, I am thankful to all my colleagues here and to all of you to have kept this moment alive, and ultimately I thank all of you, particularly those who have raised questions, and a senior man, much senior than me. So I will respect him. I am 67 years old and he must be some 74, 75 years from the look. So I am telling you this perception. With this, I am thankful, not all the panelists here, then acting CEO and MD, this ICAI RVO, plus the president of the institute is trying hard to uplift our institution, whatever area of business he is looking at, he is trying to penetrate. I cannot tell you in detail, but he is trying very hard. With this, Jai Hind, let us go for lunch.
Thank you. Thank you very much, Dr. Ashok, for moderating this session and also concluding it within time. Thank you to all the panelists. Lunch is ready. Let's have some food for stomach and be back by 2:55. Thank you very much. And you can't afford to miss either of them. The last session will be the way forward panel discussion. And before that, we have a very important session on ESG valuations. Kindly come, take your seat, don't miss out. Let's join in from the start. Did you all enjoy the lunch? I think ICAI RVO needs to be thanked for picking the right delicacies. Thank you very much. Sarika ji, thank you for getting the right delicacies and desserts. Delegates have enjoyed lunch and that is very soothing. Thank you. Please come, have a seat. So welcome back. Let's start. So when we talk about valuation, I think the first perspective that perhaps will come to anyone, be it a connoisseur or a layman, will be financial figures deriving a value. But then over the last day and a half, there have been speakers who have alluded to this fact that there could be non-financial factors too. And that's where ESG becomes important. I think last few years, the ESG buzz is only increasing, exponentially, if I may add. So we all had heard about CSR, corporate social responsibility. The question is ESG the same as CSR? Which one is a bigger subset? How do corporates go about incorporating ESG as a factor in valuations? These could be some of the questions that may cross the minds of the registered valuers and the valuation ecosystem. Well, if that's the case, then welcome to this technical session on ESG valuation. And we are extremely fortunate to have amongst us somebody who's almost become synonymous to CSR in India. Please welcome on stage Dr. Bhaskar Chatterjee. May I also invite the moderator of the session, CA Raj Chawla sir, Central Council member ICI, to please join us on the stage. And first and foremost, I will request CA Raj Chawla ji to welcome Dr. Bhaskar Chatterjee with a flower and a memento. Dr. Bhaskar is the former Director General with the Indian Institute of Corporate Affairs. And you think about him, you think about Section 135 of the Companies Act. He is now the Chief Executive Officer with Anil Agarwal Foundation. That's the part of Vedanta Group. Welcome, sir. This is an artwork representing Incredible India made of hand. So it has a geo tag, GI, geographical indication, from Bastar, Chhattisgarh. Thank you, sir. I now hand it over to the moderator of the session, CA Raj Chawla ji.
Thank you, Amit ji. Good afternoon to all. So we are going to discuss ESG valuation, perspective and way forward. In this session, we are honored to have with us our distinguished guest, Shri Bhaskar Chatterjee, the former Director General of IICA. Dr. Chatterjee, immense contribution to the field of corporate social responsibility, as told by Amiji, CSR, and sustainable development is truly commendable. He has played a vital role in formation the CSR guidelines for public sector enterprises and shaping the inclusion of Section 135 in the Companies Act 2013. ESG valuation has gained significant traction in financial analysis, providing insights into the impact of environmental, social, and governance factor on company performance. It empowers investors to align their portfolio with sustainable practices and identify companies that prioritize long-term valuation. Now I invite Dr. Bhaskar Chatterjee to the stage to share his profound insight and guidance on the topic of ESG valuation. Let us warmly welcome him with a round of applause.
Thank you very much, CA Chawla Sahab. Let me at the outset express my very warm thanks to the ICAI as well as to the RVO for giving me this opportunity to be here with you this afternoon and to share some thoughts on the subject of what we might call non-financial valuation. Over the past few years, I think most of you would be aware that whereas financial reporting, financial valuation, financial analysis, financial reporting, all of these have been refined in many ways and are going in many places. And in themselves, they are really important, including financial disclosures. And I do not mean to undermine that fact in any way. Without that, no business can run, no business can be valued, and no accurate insight into a business can be obtained. But over these last 5 or 6 years, there has been a groundswell of international opinion across the planet that only financial analysis does not give us the true picture of a business. If you want to understand the 360-degree view of what a business is, what a business entity is, what is it doing, and what are its future prospects, then the element of non-financial analysis, non-financial data, non-financial valuation, non-financial collation of data other than pure financial data becomes intrinsically vital, not just for that business, but for the entire world of business, and in a very larger sense, the entire planet in which we live. And that is the reason why we are evolving today more and more to the arena of ESG, which, as you all know, stands for the environment, social, and governance. When we are able to collate this entire picture, and we are able to not just understand it, but quantify it, analyze it, and then put it together in terms of a mark or a score or a rating, benchmark it against other industries, other entities, against world norms, then only we can understand where that business stands. Now, the demand for ESG, valuation, analysis, data, comes from where? It comes from two specific, very important parts that we should know. One is larger society and the larger group of stakeholders who are not just shareholders. More and more society wants to know that if a company is doing business, what is the kind of risk that it is incurring for the planet, for society, for all of us in the larger world outside of that business? Are they creating any risk? Are they themselves creating risk, not just for themselves, but for the society in which we live? That is the societal pressure. The second kind of pressure, even more powerful, is the investors' pressure. When investors come into the market and look for companies, practically no investment agency in the world today invests only with the financial risk element. Virtually across the world, investors are asking more and more for the ESG valuation, the ESG score. And it is important, therefore, for Indian companies particularly to understand this and to get into the international footing. Otherwise, we will fall short and be left out of the mainstream. Having said this, I will try and divide my presentation today into two parts. One part will be the international part, because there are many participants here today who have come from outside of India. And the second part is, what have we done to translate the international practice into Indian law, Indian practice, Indian guidelines? What have we done in India? Both these parts are of significant importance for us today as enlightened citizens. Please do give me a little bit of a thumbs up after about 20 minutes or so that I can wind up after that, all right? Because any specialist, when he gets into the rhythm, tends to lose track of time. So yeah, let's begin with the international scenario, a part of which I have already mentioned to you. So, when companies today across the globe look for what you call an ESG score, what is my ESG score? And investors pretty much always ask you that upfront. So, what does that score actually mean? It means that your company has been analyzed on hard data on three fronts: environment, which includes factors such as biodiversity and land use, your carbon footprint, the climate policies that your company has, natural resource conservation, how are you conserving your water, your minerals, and what is the waste byproduct that your business entity is creating? What are you doing with that waste? Then that's the environment part. There are many other environmental aspects, but I'm just giving you a few examples for you to understand. Social criteria, the second part of ESG. What are these? One, your safety protocols. What are you doing for your employees to protect them against harm? Protection of the consumer, to whom you reach out and to whom you sell your goods and services. What is the consumer protection that you are giving? Assisting, empowering, uplifting the disadvantaged, marginalized communities. And that is in fact the CSR law, which we have already passed in India back in 2013. And of course, health and demographic risks. And the third part, which is governance. There we focus on your accounting practices, the diversity that you have in your boardroom, the business ethics that your company holds up to, the executive compensation that is paid to top, middle, and lower management levels, etc., etc. So how is this ESG score calculated? ESG indicators are converted by the analyst using analysts and algorithms into segregated environmental, social, and governance ratings that are then combined into a single main score. So when you apply yourself and start doing this data analysis, you will have to come up with a final score, which then can be compared with other companies. Internationally, who actually does this job? Let's say you're a company, you want to get the score done, to whom would you reach out? And if you're in India, I will tell you in the next part of my presentation. But if you're a global company, then there are 5 or 6 very well-established analysts who do this. And the first of them is Morgan Stanley Capital International. Remember this acronym, MSCI. This is the universally acknowledged gold standard of ESG valuation and ESG rating and ESG score. We also have Bloomberg, we have Business Night's Global 100, we have Sustain Analytics, we have Dow Jones Sustainability Index, we have Thomson Reuters. These are the top 5 or 6 internationally well recognized ones. If you get your score from one of these, it is regarded as authentic in every way. Okay, you might ask, good, let's say my score is 5. Now remember, the scoring is from 1 to 100. So, usually in this rating, what we do provide is that if you are somewhere around the 70 or 70 plus mark, you're in the excellent category. In the top 50 to 70 is about good average. But below that, you are at risk category. So when you get these things, you have to ensure that you are moving towards better and better ratings. The only thing that I will caution you at the end of this international segment is that when you want a score such as this, the data that you need to provide, J. बिल्कुल सही, और मैं आपको हम क्यों बाद में करते हैं उसके विषय में भी बताऊंगा, लेकिन मैं उसको थोड़ा क्वेश्चन आंसर सेशन में बताता हूं, नहीं तो रिदम जो है मेरा वो खत्म हो जाएगा. बट वेरी वेरी पर्टिनेंट पॉइंट, क्यों हम बाद में आते हैं, क्यों पहले नहीं आते, क्यों हमारी सोच बाद वाली सोच होती है, इसके लिए हमको थोड़ा अंदर की तरफ झांकना पड़ेगा, ठीक है ना. नाउ investment grade data is required to be produced by the company which wants itself to be evaluated. So more and more international valuers, when they assess your company, are not going to be impressed कि आपने कुछ data भेज दिया बस. No, they will ensure that the data provided by you is of that level of data. Otherwise, they will not give you a score. So entry into the world of international ESG evaluation needs to be based on the internal efforts that you put. Stop for the international part. Now let's go Indian. हमारे अपने देश में क्या हो रहा है? Some years back, the initiative, and this addresses your question partially, the National Voluntary Guidelines came. And this was around 2009-10. There a little bit of zikr was there about what we should do. Then from there, we went on to what we call BRR, Business Responsibility Reporting. And that time I was the Director General of the Indian Institute of Corporate Affairs. And the first glimmerings of what we should do in India about sustainability were seen in BRR. BRR came around 2016 or so. But then Sustainable Development Goals came in from the United Nations. And those 17 Sustainable Development Goals pointed the entire planet in a totally different direction. Again, I will not take time because once I go there, then I'll get stuck with that. But because SDGs came, BRR became outdated because BRR was not adequately capturing sustainability data. And so in the Indian International, in the IICA, the Indian Institute of Corporate Affairs, we began to internalize and think what should be BRR2. And there I started this BRR2 concept and began to build the building blocks for what could be something that captured ESG. It took about 2 years, little more than 2 years, and the name of BRR2 also changed, and we called it now BRSR. So business responsibility and sustainability report. The nomenclature changed, and India went from one step back into one step forward. We leapfrogged almost about 5 years in the way that the world progressed. But just bringing BRSR by itself was not enough. Usually, and you know this better than I do, Indian corporates do not do anything until it becomes. So, from the Ministry of Corporate Affairs, we went to SEBI. And we said to SEBI, you prescribe. And therefore, SEBI prescribed, and we now have BRSR as mandatory for the top 1,000 companies by market capitalization. And that has kicked in from which year? FY 22-23. So this year, all companies, wherever I'm calling and getting calls, everyone's in a frenzy. Ki karna kya hai, kab karna hai, kab dena hai. Like all human beings, we too also wake up at the 11th hour. It is part of human nature. But across the entire corporate world, people are in a frenzy about how to get this done and how to do it quickly. So very briefly, and I think I'll just take 2 or 3 minutes to wind up. What is it in BRSR and what is it that we need to do? Now there are 3 sections in BRSR. The first are the general disclosures. So name, number, vagara, the standard stuff which you can fill up pretty quickly. It's more of a checkbox exercise. The second part is management and process disclosures. So here things become a little bit more difficult. What policies do you have? Are they in place? Are you implementing them? It goes to the second grade of difficulty. And then there's the third one, which is called principle-wise disclosures. This is where real hard questions are asked. And why do we call them principle-wise? Because BRSR is divided into 9 principles. I'll read them out to you very quickly. First principle: businesses should conduct and govern themselves with integrity and in a manner that is ethical, transparent, and accountable. Principle 2: businesses should provide goods and services in a manner that is sustainable and safe. Principle 3: businesses should respect and promote the well-being of all employees, including those in their value chains. Principle 4: businesses should respect the interests of and be responsive to all its stakeholders, not just shareholders. Principle 5: businesses should respect and promote human rights. Principle 6: businesses should respect and make efforts to protect and restore the environment. Principle 7: businesses, when engaging in influencing public and regulatory policy, should do so in a manner that is responsible and transparent. Principle 8: businesses should promote inclusive growth and equitable development. And Principle 9: businesses should engage with and provide value to their consumers in a responsible manner. So in each of these 9 principles, the BRSR has a set of questions, and it asks you to give investor credible data so that all of it can be combined together and a final score obtained. Now the last part that I would like to say is this: kudos to ICAI. And this is the last part. In March of 2021, Sustainability Reporting Standards Board of the ICAI has developed a scoring mechanism for BRSR. Kudos to you, really. Because of that today, much of what we are doing in BRSR has become credible, has become possible, and has become something to which all companies are looking up to. Many thanks for giving me a patient listening. Happy to answer any questions that you might have. Yes.
Okay,
So
yeah. Just
Getting
raise your
back.
hand. I'll bring the mic and then ask the question.
No, he already asked a question which I heard. So he is asking, why is it that India is always behind and whereas the rest of the world is ahead? Why couldn't we think of ESG? Why couldn't we think of sustainable development goals? Why did it need the United Nations to tell us, and so on and so forth? And yes, doubtless that has happened. But let me also tell you that in some parts, we are ahead of the rest of the world. Section 135, which started all of this, CSR, sustainability, ESG, you will find in Schedule 7 of Section 135, written with my own hands. In which year? 2011. How many years have passed? Just think. But even then, when we only had Millennium Development Goals, nobody had thought of SDG. Look at Schedule 7. And look, I think, at number 8 in the Schedule 7 items. And you will see that all of this ESG I have written there with my own hands. So in a sense, yes, we must pay tribute to the rest of the world. There are, now it's a globalized world. There's no India or US or anything. All of this thinking has become globalized. And thanks to our Prime Minister, we have taken India to the world stage. In COP16 in Paris, we played the leading role. So yeah, any other questions?
So the evolution to the BRSR, which is now mandatorily required, and all of us, I guess, a lot of us are reporting on that aspect. Does it not necessarily require to synergize now with the SDGs, where from the 9 principles you also have to get into the thematic part of it, which is the thematic areas that are enunciated in the 17 goals of SDG. In fact, our institute has already come up with those thematic area social audit standards, and ICI has taken that lead into actually building up social audit standards for 16 structures. And I guess the valuation also from that perspective is also moving to the financial statements. So for example, with the zero principal, zero coupon bonds that are coming up in the social stock exchange, I think you'll have a requirement for maybe option valuations coming up in the balance sheet, because at the end of the day, those bonds will actually require to be reflected as maybe even CSR spends tomorrow that is there. Now, doesn't BRSR also require to sort of work towards basically synergizing itself with the SDGs and working on the valuation principles there? And sir, if I could add to the question, you mentioned rightly, a lot of people in the private equity domain are asking for the what is called the ESG score at the end of the day, and ICA has taken a great lead in actually sort of putting that aspect of it there. But at the end of the day, the BRSR structure per se in the reporting format does not seek a score. Effectively, it's led to the evaluators to do that later. Is it not mandatory that we should be transparent about that also?
Yeah, let me answer both these questions in one stroke. Yeah. It is true that whatever you put on the table at one point of time, you can always say it needs to evolve to the next stage. But BRSR to me is literally a template, a format for the future. And we will in the Ministry of Corporate Affairs evolve it further. But at last we have something on the table. You know how long it took us to do BRSR? It takes so much time for people to say, yes, we will do it. Because you consult, and what does the corporate world tell you with all apologies to them? Sir, we are looking for ease of doing business. Every day you are throwing something at us. Rotten eggs. How will we do business in this country when you go on giving us X, Y, Z? It is BRSR today, BRSR, something RRR again in the future. What are you doing to us? So in the Ministry of Corporate Affairs, we are constantly careful, cautious, that business must still be business. We cannot chain their hands. Don't put so much pressure that business will go out of business. So gently, slowly make things happen. And BRSR too will undergo a transformation. It's a work in progress. None of these things stop. BRR was a work in progress, so is BRSR. But it is important for us to remember that BRSR, when we designed it, did not actually say, give us a score. It was left to whom? ICAI. Thanks to them, now I'm telling the companies on whose boards I sit, do your BRSR. But don't give me something, which is hot air in the end. Ye bhi theek hai, wo bhi theek hai, ye bhi theek hai, wo bhi theek hai. Na. Unless I get a score which I can compare with others, it's meaningless. So BRSR combined with ICAI guidelines is for me, and I would request all of you who are independent directors of boards, if any, like I am, always insist on a combination of the two. Then we get close to the truth. Okay? Anyone else?
Yes,
please.
Sir. Sir, I had a question, as you rightly put at the start of the presentation, that, it is not the shareholders only that you need to be concerned about, it is the stakeholders, right? Now, strictly coming from a valuation background or a quantification background, now there are some times which may happen, let's say, to make a business profitable, you may have to fire employees. Now that is something, an accretion in value may happen from a business perspective, right? Because you are saving costs. But from an ESG perspective, it has a totally negative impact.
Correct.
Right? Now, how do we sort of quantify? Now, is it like that quantification has to be done by a valuation practitioner, or is it something independent and it will be looked as a valuation is this, the ESG score is this?
Look, let me get this very clear. There are two types of valuation. One is the financial valuation. And all that you have said on financial valuation must go independently. We cannot start juggling the two, mix and match, ye bhi hai, wo bhi hai, gets you nowhere. Strictly from the business and financial point of view, this is my valuation. Independently of this, this is the ESG valuation. Now it is for the investor to take a call. I mean, Google fires 5,000 employees, Twitter fires 6,000 employees. It may make business sense to them. But is that human rights? I mean, it will conflict. Now the investor has to decide that if Mr. Twitter is going to ask the employees to bring their toilet rolls from home, is that a good practice? And is that going to be the valuation of the firm? Now somewhere the world is going to judge, and there you rightly said, it won't be shareholders because they are only munafa mil gaya to khush hain. But stakeholders will ask, who are you, Mr. Musk? What kind of human rights are you practicing in your company? What kind of idiotic company is Google that you are firing people just by email? Is that human rights? Is that what you should do to human beings? These are not chairs and tables that you consign to the dustbin. Questions different from financial valuation. So I would only say in answer to your question fairly and squarely, let the financial valuation be done independent of morality, ethics, violations, just that. And then let there be the ESG valuation. I as an investor, I as a stakeholder, not shareholder, will judge my company on my values and my perspective.
जितने भी आप बड़े ग्रुप ले लीजिएगा, टाटास हो गए, जो संघानिया साहब हो गए, सभी में ही, और इवन के मीडियम साइज के, वो भी एक जो चैरिटी का जो 10% का निकाल के रखते थे, उसको धर्मादा खाता बोलते थे। लक्ष्मी जी, गणेश जी सभी जगह अकाउंट खोले हुए थे, उसमें पैसा जमा करते थे। ये हमारे लिए तो एक जो सेंचुरीज ओल्ड प्रैक्टिस चलती आ रही है, कहने मतलब। तो उस केस में ठीक है, जो वेस्टर्न वर्ल्ड है, यूरोपियन है, जो अमेरिकन नेशंस है, ये हमारे को ज़्यादा इसके ऊपर टीच करना या समझाना कुछ।
ये जो आपने कहा ये एक बहुत बड़ा मुद्दा है, और इस सवाल का जवाब हम 2011 से 2013 तक 2 साल देते रहे, क्योंकि जब हमने सेक्शन 135 की बात करी तो सबसे पहले यही रिएक्शन आया कि साहब हम तो करते आ रहे हैं, ये तो हमारे डीएनए में है, ये तो हमारे ब्लड में है, ये तो हमारे कॉन्शियस में है, ये हर बिजनेस हाउस प्रैक्टिस करती है। और बात सही है, बट वो जो करते थे वो क्या था? चैरिटी। वो क्या था? फिलैंथ्रोपी। बट हम क्या कर रहे हैं? कॉर्पोरेट सोशल रिस्पॉन्सिबिलिटी, which is strategic CSR, which is a completely different kettle of fish from what was done जैसे दादा परदादा के टाइम में हम लोग करते थे। वो भी चल रहा है टुडे, फिलैंथ्रोपी, और ये भी एक बहुत बड़ा काम है, लोग करते भी हैं। बट CSR is how to get the profits of your company to do good for the community, and that is a board decision, किसी इंडिविजुअल का नहीं है। CSR committee of the board decides. I'm getting a lot of dirty looks from this side, so I think it's time for me to go. Thank you very much. It's been such a pleasure to interact with you.
Thank you very much, Dr. Bhaskar Chatterjee, for helping us understand ESG valuations in such a simple manner. And thank you, CA Raj Chawla, sir, for moderating the session. Thank you. With that, we conclude this technical session. Thanks a lot to both the participants. Thank you. A round of applause for both of them. May the professionals beautifully amalgam the financial and ESG part in all of their reports. And may we have a sustainable world. Because they say if it is not sustainable, it's not development. Okay, we finally come to the last session, which is a panel discussion. And we've got a very exciting set of panelists. I'd like to welcome on stage Shri Manish Kumar Chaudhary, Chief General Manager, Insolvency and Bankruptcy Board of India. Manish ji, please come up on the stage. Please welcome CA Rajan Vadhavan, Registered Valuer, CA Anand Shah, Registered Valuer, Mr. Nicholas Kunialdis, Asia Director with the International Valuation Standards Council, Engineer Pragyan Ghimre, Executive Member with Nepal Valuers Association, Engineer Valuer Muhammad Harun Ur Rashid, President with Bangladesh Survey and Valuation Companies, Firms and Individual Concerns Association, Bangladesh. And to moderate this session, please welcome CA P. Rajendra Kumar, respected Central Council member with the Institute of Chartered Accountants of India. The topic of the panel discussion is Future of Valuation Profession, Perspective from Various Nations. So we've seen the journey of 5 years. It's been interesting, wonderful, evolving, and therefore the question we are addressing in this last session, what's the way forward? We welcome all the 6 panelists and the moderator. And as we set the stage, please take your seats. We'll put the placard. I'd like to request the moderator, CA P. Rajendra Kumar, sir, to welcome each of the 6 panelists, sir. Let's welcome each of the 6 panelists. I'd like to request Rajendra, sir, to first welcome Shri Manish Kumar Chaudhary with a flower bud and a memento. They say nature smiles through flowers. So with smiles, a very warm welcome, Manish ji. And the memento with the artwork. I request Rajendra ji to welcome CA Rajan Vadhavan. Please welcome CA Anand Shah. CA Anand Shah, registered valuer. Thank you. I request Rajendra sir to welcome Mr. Nicholas Kunialidis. This is a special shawl, and if you're wondering what is it all about, so Nicholas, India is celebrating 75 years of its independence. So this is symbolic of Azadi Ka Amrit Mahotsav. We like to present this shawl to each of our international participants. Rajendra sir, request you to please welcome Engineer Pragyan Ghimre, Executive Member with Nepal Valuers Association. Thank you very much, Pragyan ji, for your gracious presence. And I see some of your team members as well from Nepal. Thank you. We like to present you the flower bud, the artwork, and the special shawl that marks 75 years of India's independence. India got its independence on 15th of August, 1947. And as we celebrate the 75th year anniversary, we bow in reverence and gratitude to those who led to India's freedom. Rajendra sir welcoming engineer, valuer Muhammad Harun ur Rashid from Bangladesh. The flower and the artwork from our Bastar artisans. So looks like exchange of gifts. Thank you very much, Harun ur Rashid ji, as we see him presenting the stroll. Thank you very much, so kind of you. I think this is what it is all about, the conference, the camaraderie, the exchange of cultures, gifts, happy memories. This is the last session. Hope you will all go back with a lot of cherished memories and learnings. Thank you very much. It's over to the moderator of the session, CA P. Rajendra Kumar, Central Council Member, ICI. Sir, you can come here. So, sir, we've got time till 4:45. Thank you.
Very warm good evening to all of you seated here. I mean it because it's very warm outside, and the atmosphere inside also is warm, I suppose, because you had a discussion on valuation. I was just hearing the discussion about a topic just previously to this session. In fact, don't take me wrong, I am not a man of this particular subject. I mean, I was here and said, okay, please come and do the moderation. And I will certainly do the moderation. But then all the brilliant minds are seated here. We have all the guests from India as well as abroad. In fact, whatever I know little on valuation is from the central excise or the GST. That's it, because that is my subject all along it has been. And if I am going to speak something, it won't make sense to anyone seated here because you're all experts on this particular subject. And we have experts seated here. We have our own Rakesh Sehgal also, the MD of this particular entity that we have. So all of you must be well versed about this. So I would leave this session in the safe hands of all our panelists who are seated here. And wherever necessary, I'll certainly chip in. Sarika, will anything to be done specifically? Any questions are there for the panelists here, or we will allow them to speak 5 minutes opening? Okay. And then we can take the questions. Yeah, thank you.
Hi, good afternoon, everyone. I'll first thank ICAI and ICAI RVO for giving me this opportunity to be a part of this session. So I think our discussion is going to revolve more about the way forward with valuation rules and valuation standards. So I think since the introduction of the valuation standards, I know it's been discussed at length in the previous sessions as well. There has been a great change in the way valuations are being done. I mean, earlier there was IVSC, there were other countries who had issued their valuation standards, but those weren't really kind of followed in the right spirit in which they should have been. And with the accumulation of the registered valuer course, the credential, and the valuation standards, there is a lot of movement, or rather there's a lot of clarity in the way in which valuations are supposed to be conducted by the valuers in India. One thing that the advantage of these valuation standards have obviously been transparency, right? Now we've noticed that from an accounting perspective, all the nations have started converging their local gaps to IFRS simply for the reason that the financial statements land up being more, consistent across countries. Readers are able to kind of identify or measure the performances of companies, since the accounting standards or the accounting implications of a lot of line items are kind of consistent. So similarly, with the introduction of valuation standards, I think that is what has happened here as well. There is more confidence by global investors, who are pumping in money in Indian corporates, Indian startups, when they see that a valuation report has been conducted using the Indian valuation standards, which are very much aligned with the international valuation standards as well. So that obviously, kind of increases the confidence they have, increases comparability of valuations of similar companies across the globe, which obviously helps investors make right decisions. Also, what has happened since these standards are more aligned with what is globally accepted, there's a lot of guidance available in terms of nuances for the valuation. So when the concept of business combination was introduced, and the accounting standard, the valuation standard spoke about market participant assumptions. Obviously, since it's relatively newer, there isn't too much of guidance available on how do you go about it. Now that's where our standards being consistent with those internationally helped, because there's several publications available on how to go about doing a business combination. How do you apply those more complicated methods of valuing intangible assets or doing any valuation of a complex security. There's a lot of guidance available which eventually will end up being issued by regulators in India as well. So I think the valuation standards have really played a very important role in evolving the valuation practice for India. Thank you.
Thank you, sir. In fact, we have our friend from Bangladesh, Mr. Rashid. Sir, I would request you to please give your opening remarks on the topic, how we move forward from here, what is the future of this, please.
Thank you, moderator. Ladies and gentlemen, member of Badarli, Beluar, home and abroad, Assalamu alaikum. Good evening of to all. I am Harun Rashid, President Bangladesh Valuation Association. Please accept my heartfelt gratitude from people of Bangladesh and my organization. All of you know that Bangladesh developed significant economics, banking sector, garment sector, and women and youth sector, as well as valuation sector. The valuation control our country's central bank. Our country's valuations two part: business and goodwill valuation, CFR. Land, building and machineries valuation part is engineer. Recently, we follow online degrees, MSc valuation, but he is not equal for C or engineer. %20 of world people live in South Asian region. South Asian people, the valuation sector develop day by day. We are willing to advance the valuation process of the South Asian. There is no alternative to globalization in order to improve the quality of valuation sector. South Asian countries valuation organization can play on important roles in that regards. So I hope we are unity. Border fee valuation. I am member ICAP. ICAP is Asian Political Party Organization. Asian 32 countries, political parties member this ICAP. Last, our convention is Istanbul in 2020. We decide visa free Asia, one Asia. Why not valuation border free? Valuation is most important is developed country. Our NDG, we like South Asian country, Sri Lanka, existing Pakistan, other countries, Bhutan, progress this valuation sector. Only for Bangladesh, Nepal and India, relation build up, but not others country. Indian, another organization, not Bangladesh, all time. So we declare South Asian Valuation Organization as like ASEAN Valuation Organization under IBSC. We problem many. Climate change is big problem of valuation sector. Our country this month 42 temperature, this record. Our industrial area, heavy risks for fire attack. We know Istanbul, Turkey, earthquake, many building damage, government arrest many developer company, loser bank. So Belluar is be careful. Valuation is important of developed country. Bangladesh government decide our policy. Bank and financial institute must follow international valuation IBS council, IBS rules and regulation. So our Asian country director She is organized total Asian countries open discussion meeting, physically meeting, not Zoom or others meeting. We are IBS arranges Asian countries a convention. This program attend all Asian countries. Our countries valuer discuss your problem, solution this problem, education sector develop, valuation policy develop. At last, not least, I thanks organizing committee. Short time is 2 days program. You are always tired. Long time program. Always invite in Bangladesh. Our next conference, our fifth ICAI ROB Foundation Day, fifth Foundation Day. Our organization already over 10 years. His Foundation Day. So, our Indian friend, our Nepali friend, and our IBS director invited in Bangladesh, our next convention, 2024. Thank you very much. Thank you all.
Thank you, sir. So you are our big brother in valuation. For more than now 10 years you are existing. So I think you are our big brother in this particular field. We have our friend from Nepal, Ghimire here. Kindly please share your views, sir.
Thank you, sir. Namaste and good afternoon. I am representing Nepal Valuer Associations. I am Pragyan Ghimire. Already you know about us after looking the program over here. I don't have much more practice of speaking over this type of conventions halls or this type of program. So if I done any mistakes over there, please forgive me. Okay. So I want to congratulate you to this Foundation Day, 15th of May for today, for your birthday, no? What is called? Establishment Day. And we have already sent our message from our Valuer Association, which is already published in your souvenir, and you have seen that, or you will got a copy of that, or you have to find, you can find that in online too. So most of the valuations work in Nepal are similar to Bangladesh, which my friend already told that. And here we have learned much more things than what we have expected from our country or our participation. We have 2 more participation over there. My 2 friends are there. And we 3 attend this convention, full day, 2 days full. We are going to take about some points about our Nepal Valuer Associations and how we are doing valuations over there. And if you have any questions, you may ask us formally or informally. Formally in these panel sessions, and informally in the tables or after the program you can connect. Nepal is a small country, and there is only one association related to Valuer Association, valuations done. It's not an association formed by law or act. This association is formed by the demand basis, or when the valuer are in a problem, then the group of engineers create one association which is now working as a Nepal Valuer Association with 800 plus members. We don't have other associations, but we have chapters in all our 7 places. There are 7, what is called? Pradesh? Province, no? In 7 provinces, so there are 7 chapters. We lead the overall places, and we are from the central committee. So, in our work in our valuation, mostly we will do the property valuation of land and building, mainly for the mortgage purpose, for banking purpose. And most of our valuer are faced problem by bankers. Bankers problem like yours, we have listened you formally, informally in 2 days, and we have identified some of the problems which are mostly related to us. So we are facing the same types of problem too, and I said that we are at least 6 years behind you. That means you have Act in 2017, and we are waiting for Act in our country. We are lobbying for this. And I have asked for Nicholas to help us, and he said, oh, I will come to help you to establish in our act, law, regulation, guideline, whatever you told, to your country for this work. So I will not tell more about that. You know, the one sector of valuations we are now currently doing, that is land and building with machinery, and I haven't thought that before that the chartered accountants are the valuator. I think they are different sectors, but now I understand that the chartered accountants and we all of different sectors can be evaluators with regulating laws and defined TOR. After what's the role of the chartered accountant for valuation purpose, which property they will valued. We have seen lots of valuation done, but the term they don't use as a valuations for a chartered accountant value. We haven't seen using the term valuation for chartered accountant in Nepal, but they have done so. It may be my mistake, and I haven't heard about that. Most of the our friends of here are visited Nepal and done valuation over there from different purpose. And these Nepal and India are nearer country, and expertise from India are always welcomes in Nepal, and they have done lots of work in Nepal. But I don't think there is any regulation to go international valuator like Indian, Bangladesh or other to do work. That's because lack of law. They will do like other multinational company. Yeah, a multinational company can do anything in any country. Likewise, here valuators or other can coordinate with local valuators of their country or any organizations related to that, and they can do the work over Nepal. And most of the others Indians are also like Nepalis also are coming to India to do work in unofficial sectors too, and there are also, because there is no boundary over here, so you can come here or we can go over here and do lots of work, but unofficially we don't have law to regulate international valuator or local valuator, or so we are demanding it in our places. So if you want to know more, please ask me the questions. Thank you for this opportunity to represent Nepal to you, or saying few words to all of you, and we have learning so much things more than expected. So entire team, I was congratulate and thank to your entire team for this opportunity. Thank you.
Thank you, Mr. Gimire. In fact, the Institute of Chartered Accountants of Nepal was set up by the Institute of Chartered Accountants of India. And for quite a number of years, I think your examinations also was conducted by us, your institutes also. So as you mentioned that you don't have any particular law as far as evaluation is concerned, I'm glad to say that the ICAI and its organs, the other organs which are there, will be able to assist your country in establishing whatever that you may require. Thank you very much, sir. Thank you. I now request Mr. Nicholas to give the global perspective of whatever that we are discussing in the last 2 days.
Thank you.
Thank you.
I have to put the mic down because he's so tall. You know. Well, this has been 2 great days, and the question is, what's the way forward for the standards and for the valuation profession? And I'm going to keep it simple, and I'm going to use an analogy. Of course, I know many of you, and you know how much I like to come to India People are so friendly, and of course the food is so nice. And so the question is, what happens to valuation standards? Well, I thought about it, and in fact, I'll just tell you a small anecdote. Earlier on, I was having lunch with you all, the delicious lunch, and of course there's the dessert buffet, and I look at this dessert and it looks pretty good, and it's rice gear, right? And I'm like, wow, this looks good. And I was having lunch with two people, and I told them, you know, this is rice gear. This is like, and I'm sorry if I'm not pronouncing it well, but we have exactly the same thing in Greece. It's called risogalo. Riso is rice, gala is milk. Risogalo. It's the same dessert as the Indian rice gear, right? The only difference is that I think in India you put dried fruit and maybe some almonds, some pistachios, depending. I imagine there are many ways of doing it. And in Greece we put cinnamon, which also incidentally comes from here, right, from India, but that's another question. That's another matter. 2,500 years of trading with India, of course. So this is exactly, you must be thinking, why is he talking about Indian and Greek desserts? Well, this is why. The valuation standards are just like the desserts. You can have the same dessert in two different locales, and the only difference is the topping, right? And this is my message. The international valuation standards are the dessert, and then we understand very well that you can have different toppings depending on the jurisdiction, depending on the needs, depending on all sorts of things. So you can have the rules on top of that. And then, of course, there's local implementation with, and there again, is it compulsory, is it not compulsory? Is it a professional organization or is it state-related organization? Is there one, are there several? And so on and so on. We at the IVSC don't say that there's one answer. In effect, we don't really care if you put cinnamon or if you put pistachios on your dessert, right? What's important is the rice gear underneath. And that's, I think, the message, and I don't want to take too long with this, but that's the message. The standards are here to support the efforts of all the constituents, of all the stakeholders, of course. They're here to protect both firms, valuation firms, and valuation individuals, valuers, individual valuers. They're here to facilitate capital allocation across borders and within jurisdictions. They're here to help better fairness in various adjudication, whether it's litigation, whether it's expropriation of land and for infrastructure and so on. These standards are used in many circumstances, and they are very adaptable, right? And that's really just the message I wanted to do. I just wanted to convey as a conclusion to these 2 great days of learning and of sharing and seeing all my friends here, right? And I personally, and on behalf of the IVSC, we're happy to be putting all this effort into what is, after all, a great country, a great market, a great jurisdiction that has its place at the heart of the modern global economy, of which, of course, valuations are an integral part. Thank you.
Thank you, Mr. Nicholas. Now we come to a very important personality who has been a regulator and is also currently on the IBBI regulating the profession of the insolvency, and where valuation plays a very, very important role. Shri Manish Kumar Chaudhary ji, sir.
Good afternoon, everyone. So, conclusion of today's conference, and looking everyone tired. I don't know how long I can speak for all those points. I think you have already covered during the last 2 days. So, distinguished panelists, all valuers and other stakeholders of the IBC ecosystem, ladies and gentlemen. First of all, my compliments to the ICAI RVO a frontline regulator on 5th anniversary. So ICA RVO has truly established their positions in the valuation professions, and now it's going to be independent because they are driving into the other two areas also, land and building and plant and machinery. So topic of this panel today is a future of insolvency profession. So and the perspective of the various countries. So we heard a different perspective from the Bangladesh representative, Nepal representative, and of course the global perspective by the Mr. Nicholas from the IVSC. So it is really happy to note that Bangladesh also facing the similar kind of ecosystems. They are also developing the ecosystem like a valuation policy as well as some sort of a valuations legal framework they are developing. Similarly, Nepal is also have some associations. Of course, this is an industry associations, not a kind of a regulatory framework, but it's a very indeed great to know that they are also in the same pace where the other countries and we are also moving on the directions. So before giving my views on this perspective of the our country as well as future of the insolvency profession, let me say a few words about today's the conference theme, and that's sustaining public interest through valuation ecosystems. Why I'm just wanted to say a few things about, because this titles touches the thought process of the policymakers to somehow. When we talk about the sustaining public interest through valuation system, so there are two elements involved into this. First is the public interest, which is one of the objective of the policymakers, and other is how the valuation ecosystems serves the public interest. So my take on this public interest and the valuation ecosystems, if you can see the Black's Law dictionary definitions, what is the public interest? Public interest is something in which public or some interest by which their legal rights or liabilities are affected. So if you can see in the valuation ecosystem also, sorry, in the valuation ecosystem also when the economic transaction you are valuing, and the rights and liabilities of the parties involved in the transactions are also affected directly, indirectly. Even if you can see any error in the valuations, that will also alter the rights and obligation of the parties. So truly this has a clear nexus with the public interest. To elaborate this, even I can say a few things about, suppose let's say valuation is being used in the income tax and the wealth for the property valuations in case of the capital gain. So there also, if the valuation is going wrong, then definitely there is a loss to the exchequer. So the valuations ecosystems has a direct nexus with the public interest, and that's why I thanks this ICA for inventing this as such a thoughtful theme, which is really touches to the policy makers also. Let's come to the perspective of the India on future of valuation. The future of valuations, if I can talk about what could be the future of the valuations in India. So it's a very difficult answer because I have to do the internal and external assessment. For example, if you wanted to do the future projections of any business growth, there is a requirement of a SWOT analysis. So we have to assess what are the strengths and weaknesses, and what are their external factors which creating a threat on those growth. So I just briefly touch upon how the Indian ecosystem, valuation ecosystems looks like in terms of their strengths and weaknesses. So if I talk about some strength, so in India the economic activities are expected to increase due to strong economic growth of India, and this is going to really a very big opportunities for all the valuers for in the different sectors. Similarly, we have a sound experience of practicing valuation for more than a century. So this is also one of the big strength of our Indian valuation ecosystem. apart from that, there are different industry associations which are working in this valuation ecosystems more than 50, 60 years. For example, Indian Institute of Valuers that are also promoting developing the best practices. So these industries, these industry associations are already available exist in the Indian ecosystems. So this is also additional strength which we carry. Similarly, now if you can see last more than 5 to 6 years, the valuations ecosystems is now taking another regulatory ambit. So wherein the regulator, frontline regulator, and the regulatory framework to regulate the valuation profession, everything is in place. So these are the strengths which we can, for the coming years, we will use this for the development of the valuation professions. As far as the weakness is concerned, there is a limited regulatory oversight, and the regulatory framework is still fragmented in our India. So that is something which creating a trouble for us to scale up and develop these professions expeditiously in the pace with the economic development. As far as the threat is concerned, of course, the economic uncertainty is really always linked with the global event and uncontrollable factors. But I think the use of automatic models and the lack of policy support, this is also one of the threat for the entire valuation ecosystems. So based on this analysis, it may be noted that the Indian valuation ecosystems is established for many years. Large number of skilled workforce exist, and the many established institutions, including RVOs, are there. So we have a quite good strength and the opportunities which we can leverage for the coming years, and that where lies the future of the valuation ecosystem in India. And I see from my perspective, the valuation industry in India will rise the new heights in the next years and in the coming years. Reform in the valuations, there are a lot of talks about the reform in the valuation ecosystems, because our Indian legal systems and as far as the valuation is concerned is completely fragmented over the period of year. And there is a need to have now reform in the valuation ecosystems. Yesterday, our ex-chairperson of IBBI, Dr. Sahu, they also talked about the evolution of regulatory framework. So there are generally need arising in the valuation ecosystem. So how this reform is taking place in the regulatory framework, and how it will affect the valuation ecosystems. So if you can see under the different segment like IBC also. So when the initial stage, how the regulatory requirement is being realized under the different laws. Similarly, in the valuation ecosystem also, the valuations is being recognized under the Wealth Tax Act, SEBI, and the different laws. But initially, the evolution is taking place on the similar lines. For example, IBC insolvency was also regulated through the different act. But now the IBC 2016 came, so consolidation of law happens over the period of time. Similarly, Electricity Act, which was also under the different act like in 1910, 1947 and 1956. That also consolidation have been taken place. So now it's a time in the valuation ecosystems that the different law needs to be consolidated, and we should have one single framework and single law and regulators and authority, so that the development will take place objectively, and it will attain the new heights. So that's the need which the reform in the valuation ecosystems is now recognized. So in this regard, I would say we already on the way of reforming the valuation ecosystems. If you can see the last more than 5 to 6 years, there is one committee on consolidating the valuations laws, and there is a 2008 valuer bill is also there, and recently some discussions in the FSDC meetings and others. So that what all those is indications of that the valuations, the reform in the valuation ecosystems have now commenced, and now we are going to take the next level. So the next level of reform will start in the valuation ecosystems. Apart from that, the strengthening of valuation ecosystems. So we already started the strengthening of the valuation ecosystems. So in this point, I would like to say something on, because the IVS, the valuation standards, is also being talked about by my earlier speakers also, and during the last 2 days also, you must have heard about a lot of about the valuation standards. So how the future of the valuation standards in the India, and how we can take forward these valuation standards in this valuation ecosystem. So as Mr. Nicholas pointed out, that the Indian valuation standards, international valuation standards, IVSC, they also come out with certain standards. And I have also gone through the standards, though I am not an expert in the valuations, but I have just gone through from the policy point of view. And when I saw this valuation standard, my first impression is that these valuation standards try to cover as many scenarios and as many situations which the valuer may come across during the course of the valuations, and it is a quite general. So it does not cover any specific aspect. So where I can now understand when the valuer is trying to apply those values, the IVC standards, there may be difficulties, because always you will find two answers. So either one standard can be applied, or the another standards can be applied, or some sort of ambiguity will create. So this kind of situations is always arising. So why this is happening? There are two reasons. One is because it's IVSC has been prepared globally by taking into the feedback from the many parts of the country, many countries and the different experts and the different segments. So these standards is try to cover the different all kind of situations, but when some country specific standard is required, then the country's domestic aspects and the policy regime, economic aspects, and the legal jurisprudence is also different. So all those needs to be taken into account. For example, in India, if you have a contractual dispute, the approach for the contractual dispute is also different. Now, how can we take into account while undertaking the valuations? So these kind of things needs to be addressed. Similarly, if you can have evaluations for the particular subject, so it also varies the subject to subject also. Now we come across recently facing the problem in the IBC also, because the requirement of the IBC, so requirement of the specific segment valuations is also different. Now how can we address that? So there is a specific requirement for the subject matter is also required. So my point about the IVSC that IVSC is a general, so now we should have a country specific standards also. That addresses our domestic conditions, and secondly, for the subject matter, we should have some guideline, so that the valuer should have a clear understanding while undertaking the valuation, that how that standards can be applied for the particular assets valuations. So now, if I can see in our country also, that the valuations talk about the need of the valuation standards has already begun. ICAI RVO has already come out with the standards of the SFAs, and hopefully they will come out for the next other two assets also. Similarly, other RVOs are also working on the standards, and at the same time we also thinking to come out with some guidelines for the IBC, so that will be the precedence for the other other sectors also. So this is what about my views on the standards. Now lastly, I would like to something say about the benefits of the regulatory systems, because during the course of this conference yesterday also, there were a lot of talk about the regulatory systems, and there is a lot of fear of being regulated. So I have also experience of working in the regulatory environment for more than 10 years. So I can understand your concerns that once you will become under the regulatory regime, there is always fear, because there is a lot of compliance requirement, and of course there is somebody have a checks on it, and sometimes it may converge into the some sort of actions also. So coming from the unregulated regime to the regulated regime, there is always concern, and that is what is happening right now in India also, because IBVI is now after completing the 5 years, now we are moving towards more stringent way and going into the accuracies and the preciseness and looking into the valuations also. So there are always unknown fear of the regulatory scrutiny, so that we need to address. But I have a message for all those valuers, that those who have a fear of that. While working in the IBBI, I was receiving a lot of complaints and grievances against the valuer, and I will give some example. If the valuers is undertaking some problems or difficulties, and they are facing a problem with the clients or the CDs, they are facing a problem that there is some complaints are going against the valuer. Now, how do we address that? Because if that complaints make either converge into the FIR or some sort of action from some vigilance bodies, so those values are really facing a problem. Now, once they are approaching to the IBBI, so I can ask the one questions: are you registered or non-registered? So once they are registered, then I can regulate. If he is non-registered, then I can't regulate. If you can see the regulatory regime, if we have a strong mechanism for addressing those complaints and grievances. So once those complaints we receive to us, we will address first, we will examine from the technical point of view, and if there is no merit, we will dismiss it. And in case if you have any concerns, you can review in the IBBI itself to the next authority. So they will address your concerns. But what will happen, what the benefit which you will receive is that you don't, any aggrieved party can't dare against you to file the FIR, because a lot of valuers are facing a problem of filings against the FIR, and they are putting into the some vigilance, or some agencies are behind that, they drag into the legal tussles and other things. But if you are regulated through the regulatory regime, the first authority to address your concerns is the regulator. So why should we have a fear? We should not have a fear on that. So being a regulated is always a benefit for you. It is not for, you are not going to lose anything, or only the thing is that small compliances and checks is required. So to that extent, we should accept it. Similarly, valuers are doing a lot of valuations, and there is a lot of information, the valuing, that analysis, data and other things. If you are carrying yourself, it is a liability to you. Why should you carry that? So if your regulator is there, you can submit to the regulators. And because as a part of M3, M4 forms and others, if you are submitting under that, then it is a transparency. Now it becomes a public property. So you will have another safeguards against if something will happen to those data also. Similarly, there is an external threat like any kind of improper practice, or some threat from the technology side. If something will arise, then of course the regulator will intervene and can ensure the protections. So the regulatory regimes is, my concern is that the regulatory regime is for the stakeholders, for the valuers, and for the protection of that. Of course, some compliance, some checks is required, and being a regulators, always we play the parental role. So as a part of exercising our parental role, sometimes we may be little bit harsh, but that is always for the benefit of the valuers. It's not intentions to punish them unnecessarily, and harsh punishment also. So that's what about the regulatory regimes. Thank you so much for these gestures, and I'm really glad to hear these gestures. And so that's why now, taking forward your point, I heard there are primary members of 5,000 in ICI RVO and more than 6,000 in IOE RVF, but their registered value is only 1,000 and 2,000. Why this is so? If you are coming together, if you are coming to the regulatory regimes, we will definitely, I think this will be in the benefit of there. And Sarika ji can explain what is the compliance burden, how much is the compliance burden, and how much time you require. Only in a month, only 1 hour, not much then. And I think the 60 some hours, yeah, twice a year. That's correct. And sometimes only thing you have to visit the ICA RVO or the RVO where you are registered only for some CEPs and some educations. That is only for your updations. So why should we worry about that? So please do not consider the regulator as a harsh action, because nowadays I heard some voice around during the lunch and others, that because of some orders issued by the IBBI, and there is a little bit panic. So I have a message for all those: please don't panic. It is for your benefit, and we take these actions, or we have a regulatory protection system is for you. This is only protecting you. See, if you can say, let's say we are taking a small punishment or small kind of things, but if the same thing goes to the FIR or some agencies, you can understand what extent of punishment also. So that kind of situation is there, and this is truly gestures from the regulator sides. Of course, apart from that, I think I will not speak much about different aspects. So I have covered a different. There's one more point. Steps taken by the IBBI. We are also taking a lot of steps how these valuation professions can be expanded to the other region also. So we wrote the DPAM also, and they have also done SEBI also already done the registered value, use of registered value. So how the registered valuer can be, service of the registered valuer can be expanded to other jurisdictions. So we are actively working on it, and let's see how during the course of coming years how we can take forward. But for all those we need a help of RVOs and all the registered valuers, and not only registered value but all those valuers who are not registered also, to bring out proper practice. And if once you will come with the problems, issues, we will definitely take up to the next level, and that will be enriching for us. Regulators always works with the stakeholders engagement. We always have a consultative process. So even if you can make a policies, if you can laws, or whenever we can get a power, we will definitely come out with the regulations also. That time also we will have a stakeholder engagement. So we will prepare whatever the law is being prepared by the regulator is through the stakeholder engagement and active consultation. So you can very well anticipate that what could be the law. It will always, coming from your feedback. So the regulatory certainty will also be maintained, and that is our paramount objective also. So you will have a quite protections and certainty about the policies. So that will also benefit for the regulators. So at the end, I entrust my faith and the competence and talent, integrity, ethicals, and the mindset of the registered valuers, and also congratulate the RVOs, ICA RVO for their efforts for organizing this event and their contributions in the valuation ecosystems. So with this, my best wishes to ICA RVO, and wish you all the best. Thank you so much.
Thank you very much, sir, for taking us in detail and also drawing the parallels between the registered valuers and those who are not registered, and how registered valuers can actually help in this process. In fact, now I leave the floor to ask any questions to any of the panelists seated here. Yes, sir.
Sir, with respect to what Manish sir said, well, we know that you're working in the interest of all the stakeholders, including the registered valuers, and we appreciate that. The only suggestion that I have is that, as you work along the guidelines that there are for IBC, or for that matter, any specific valuation vertical, do keep in mind that it allows for the creativity that the art of valuation has. And ensure that it is flexible, it is not claustrophobic in terms of guideline structures, that it becomes very fixated. And that's one. We appreciate that. We don't fear it. We know that both you as also the RVOs are working much in interest of the entire structures, and we are all working hand in hand with what you're saying. In terms of expanding the scope now, the gentleman sitting right next to you also works on the GST and custom we mentioned initially. I think what another venue that is there is basically, sir, the valuation aspect in the indirect taxes. That is very critical, because the transaction value rules that are there, for example, GST. Now, if you have to sell a second-hand machinery today, you have a very claustrophobic structure of depreciate and platform, whereas our valuation platforms prescribe for the replacement costs or the depreciated costs and stuff that there are. If syncing in the registered values to those new paradigms or the old paradigms being shifted to the new ones, I think it will be a very helpful structure in expanding the scope. So I thought I'll just leave that as an observation that's there. Thank you.
I think I will have a quick response, and thank you so much for your suggestions. It's always useful. But I remember yesterday, our ex-chairperson, Dr. Sahu, already mentioned about the laws. Laws should be minimum. So the same philosophy we also followed. So we don't want it, we don't like to prescribe as much as possible. We wanted to keep as minimum as possible, so that your creativities and the technical things, because once we enter into technical things, there will be another problem. If I can specify one technical law, then it will end up, because some adjudicating authority will have a different interpretations, and it will create a more dispute rather than achieving the objective. So that is the approach which I think regulator follows, and that will really helpful. Thank you so much.
To leave you another suggestion, one of the biggest challenges today in valuation is the fact that we have an open secret called liquidation value, which is actually said to be very highly confidential. And I use the word open secret because ultimately it's sort of, every secret has a propensity to leak at the end of the day. My sense on that is that why is it that post Form G that comes in, or the resolution plans that come in, are not the valuation, not actually put in the public domain at the end of the day. That would perhaps actually lead to lower number of cases that there are right now in challenges that there are. You could also, we don't mind actually sort of working on filling in forms or otherwise. They could also sort of spell out the methodology used by the valuer and also the valuations per se that is there. It would also lead to the benefit which is value maximization at the end of the day in IVC.
Okay, thank you so much. Sarika ji, please note this point actually, so that at least we can take up the next.
Okay, one question
there, yeah.
Sir, as suggested in one of the Chennai conference also, as you have said that many RVOs have said, telling also that there are around 4,000 to 5,000 primary members, and in other RVOs maybe 500 to 1,000 primary members. So why can't they be registered under the IBBI so that they will also come under the regulation? As I have told, IRDA, while starting the exam, they had directly taken the existing valuers under the IRDA ambit. In similar lines, IBBI also can take the existing valuers who are practicing for more than say 5 years, 10 years, or so forth and so far, so that they will come under the regulation. The fight will be reduced.
So not getting your suggestions. What is your suggestions? You want to remove the exam?
So, for the existing valuers. For the existing
value, he wants them to be added.
That is the exception you are looking.
Sir, actually, we want to say that all the existing valuers should be brought under IBBI, and some time should be given. They have to pass the exam, get qualified, and get regulated under the IBBI. Some people are having some fear why we should go once for parallel practice going on, why IBBI undergoing the regulation is not very mandatory and compulsory. So they are going on, going on. So this is the reason what we want to bring them under an umbrella, put a condition, time bound, 6 months, 1 year. You have to pass the exam and get yourself regulated under us, get registered, and number from IBBI registered numbers. That was the means. This is the one point to be taken to consider. If it is viable and workable, it will be good for the unity and single law and single umbrella.
Okay, thanks for your suggestion.
Thank you.
It was there in the draft bill also. In the draft rules, it was there that those who are above 50 need not have to give the exam. So in addition to that, my suggestion is that the existing valuers who are 34 AB valuers should be taken under the ambit so that they are regulated, because while they are doing bank valuation, IBBI is not necessary, but when it goes to insolvency, our role starts. So there are too many types of valuers. There are 34 AB valuers, there are IBBI valuers, and now PMLA valuers. So one more has been added. The number of PMLA valuers are very less, not even 10. But again, that third category will start. So instead of that, one valuation values should be there.
Thank you, sir. Thank you.
सकते हैं।
ICI RVO, would you like to respond on that? Rakesh ji?
Doing valuation. Same CA firm cannot undertake as registered valuers entity.
Yeah.
Yeah. No, sir. COP surrender is not required. Only a different entity as RVE, as per ICI Council, it is allowed, sir. You can practice as a registered valuer, you can practice as an insolvency professional along with a chartered accountant firm. However, if you, you have to practice in your own name, and where you are working as a firm, you have to have a different firm which has the same objects as valuation. It cannot have multiple objects.
Okay, so we close it.
Any further questions? Thank you, panelists, for sharing your valuable thoughts and ideas. And over to Amit.
Okay, thank you very much, Rajendra ji, for moderating the panel discussion, and thank you to all the participants. Thank you very much. A round of applause for all the participants. Thank you. Well, with that, we do come to the conclusion of the two-day conference on valuation. Congratulations to everyone and gratitude for your active participation. I invite Sarika ji now to formally propose a vote of thanks. Thank you.
Thank you so much, sir. Thank you, Rajendra Kumar, sir. Thank you for coming from Nicholas, from Singapore, from Nepal, from Bangladesh, from India. Everyone, we thank from the core of our heart on behalf of ICI Registered Valuers Organization to continue with us so as to make this conference a successful event. In absentia, I would like to thank our President, sir, CA Aniket Sunil Talati, sir, who was like behind this event. He is the one who is actually, he said that you have to conduct this event even if we are not there. It can happen only on 15th of May when it has its foundation day. Thank you, IBBI, Manish Chaudhary sir, Subhash Chaudhary sir, Vinay, IBBI chairperson, to associate for this event along with ICI Registered Valuers Organization. Thank you, ICI RVO team, for making this successful. CLCGC team of ICI for making this successful. Amit Arora, thank you so much, sir. Sir, we have a small memento for you. You were kind enough to accept our invitation to be here. You are not as small as you show. You are behind, all Republic Day, parades, everywhere, all Independence Day events. He is the one who hosts. He is the one who works with Doordarshan India. So he is not, yes. And on one call, he just accepted to come. Like, he graced this event with us. Sir, we would like to definitely, sir, please. फूल कल देना चाहिए था, but we feel that आज भी चलेगा. Sir, it is very special. It is 75 years completion of India. What you are telling, I'll tell now. It is handmade. It has a GI tag. बस्तर छत्तीसगढ़ से आया है. Especially for you, sir. Thank you so much. Thank you, Rakesh Sehgal, sir. Thank you, all of you. Thank you so much. हाँ sir, national anthem कराएंगे sir. Nepal Valuers Association, they wanted to honor ICI RVO on its foundation day. Thank you so much, sir. MD, sir.
The event is over, but a couple of statements from my side. See, we all heard about the black swans. Black swans are those events you cannot predict. The COVID happened, financial crisis happened. But in lessons of financial and economic crisis, there is another term, grey rhinos. So what is a grey rhino? A small risk which will snowball into a big risk. We are aware about those risks. So the financial risk, economic risk, geopolitical risk, how do we calculate those risks? So I think we are those faculties, the valuers are those faculties which can bring sustainability into the system. And when we and the Sarika and me, when we are deciding about this conference, we were wanting it to keep it simple, 5th Foundation Day for conference. And then let's say that we decided that let's integrate to the sustainability aspect, because ultimately what is the role of the profession? It is to create sustainability, because whether it is financial stability, if there is financial stability, the corporates, the stakeholders, they prosper. So I think with that intent, and I will quote Professor Toynbee, who has written about history of civilizations. So he says that civilizations which are subjected to constant challenges, they only will grow. And there will be small faculty of people, the leaders, we call that faculty of mimesis. So I think we valuers, you all sitting there, you are all those change agents, cognitive agents, who can bring prosperity and stability into the system. Thank you and God bless.
Yeah, kindly rise everyone for the national anthem, please. Thank you.